end of the fiscal year. And then let's finish with Elon Musk, his brain-computer company Neuralink. They successfully implanted the device into a second patient. Musk provided few details about the surgery, which had to be postponed after the patient originally scheduled for the second procedure had to withdraw in June because of an unspecified medical condition. The first patient had Neuralink's device implanted earlier this year. Now look at some of the company stories we're following.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, Jess Benton sitting in for Alex Steele. I'm Paul Sweeney. Looking at the NASDAQ here, Jess, we're at, off 3.2%. That's 540 points to 16,235. Bad.
That's right. It's 13% off of its July 10th high right now. And if you want to look at the S&P 500, right now it's around 8.3% off of its record.
Yeah, I mean, but it was worse. I mean, intraday low for NASDAQ, again, we're at 16,200. It was 15,700.
That's
so
right.
Bouncing off the lows here, but maybe people doing that buy on the weakness thing. Mandeep Singh joins us here, senior tech analyst for Bloomberg Intelligence. He's in the Bloomberg Interactive Broker Studio. Unlike his management team, he shows up to the office. We appreciate that. Mandeep, so what are you making of the NVIDIAs of the world? I mean, I could have bought it on the opening at 92 today. It's at 100 today. Are we just buying weakness here for your tech names?
Well, so one thing is fairly obvious at this point of time that semis was a crowded trade. Everyone was buying into semis because they thought they were the most direct beneficiaries of the generative AI wave. They still are, but valuations clearly were stretched, and that's why, you know, with macro playing the role it has, with interest rates and other stuff, it, I think, was a big risk, and that's what we are realizing for the last 2-3 days. And to answer your question, whether, you know, this is a buying opportunity or not depends on what sort of estimate revisions we see with the companies. And NVIDIA still hasn't reported. I think the risk for them is because they have that triple-digit growth, where do we go from here? Do we keep growing, you know, north of 20-30%, or will the growth rate drop to single digit, which has happened before with tech companies? We have seen that with Tesla. We have seen that with likes of Zoom. And what you want to avoid as an NVIDIA is that repeat of the sharp tapering. And I think we'll find that answer later in the month.
All right, there's also this news out there, I think is important, that NVIDIA's, there's a report out that their upcoming artificial intelligence chips will be delayed due to design flaws. That's not good.
That's not good, given the risk that I just talked about. So, you know, if there's one thing you want to avoid as a hardware company, it's the same risk that Apple has. It releases a new phone, there are some glitches in the phone, the whole sentiment changes. And I think NVIDIA is at that risk where even slightest of delays with the newest version of its chip, it's going to cause a panic. So that's part of the reason why you see NVIDIA dropping more than the other Mag 7 names today.
Of course, as you know, NVIDIA's next report isn't until August 28th, but I know a lot of people were looking to, when it comes to his customers and how they were spending ahead of that report, whether you're thinking about Alphabet, Amazon, Meta, or Microsoft. What did we glean from those reports and what that could tell us ahead of NVIDIA reporting?
All the data points were positive in the sense that every hyperscaler talked about raising their CapEx guide for second half and for 2025. And no one even remotely mentioned that they are looking to get off from NVIDIA and, you know, develop their own chips and scale it up. So clearly, everything we heard from the earnings so far has been positive for NVIDIA. But still, that doesn't change the fact that we are dealing with the law of large numbers when it comes to NVIDIA's data center revenue, $100 billion run rate this year. I mean, they just can't keep growing triple digits. And that's where the pace of that decline comes into play.
Talking to your clients over the last few days, do you get a sense that they are buying the weakness, or are they just kind of maybe take some chips off the table?
I mean, the sentiment still is that generative AI is a secular trend. It's real. You see that in the revenue that Microsoft is generating with AI workloads, with their co-pilots, and this will continue to ramp up. The question is at whose expense it is coming. We saw that with Intel last week, that clearly it's hurting their legacy CPU spend. So when you see trends like that, where, you know, a few companies are doing exceptionally well, the other ones not so much, that's where you have to take a pause and see, is it going to have an effect on the overall sentiment? And I think we'll find out if this downdraft will have an effect on the overall consumer spending for that matter.
All right, we'll see. August 28th, as Jeff was pointing out, that'll be a big day for the tech space and the market overall. Mandeep Singh, Bloomberg Intelligence Senior Tech Analyst. We're going to have more coming up. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, we're going to start things off strong. Marcus Ashworth, he's a Bloomberg opinion columnist. And by folks, he definitely brings his opinions. No holds barred there. So he's going to ask him about, should the Fed do an emergency rate cut? He's got some thoughts there. Carol Pepper, she's a founder and CEO of Pepper International, join us to discuss markets right now, the outlook. Again, we're bouncing off the lows, but a big sell-off today. And then Mike McGlone, Bloomberg Intelligence commodities analyst. We're just going to rip through Miami Mike. Every commodity you can think of, just phone it in, and we'll ask him about it. We might get to crypto as well, because he can do everything from like soybeans to crypto. So we'll check in with him. But right now, let's kick off this hour with Mr. John Tucker.
All right, thanks, Paul. Market Drivers being brought to you by Interactive Brokers Portfolio Analysts. Consolidate and analyze all your financial accounts on one powerful dashboard for free. Sign up for Portfolio Analysts at ibkr.com/free-PA. The S&P 500 moving closer to correction, now down 8.5% from the July 16th high. And you have, of course, technology shares leading the sell-off today. All members with a magnificent 7 cohort of stocks are down. We have calmed down a little. Wall Street's fear gauge, the VIX, now only at 41. Down considerably from the highs of the day. The S&P 500 seeing some relief from the ISM services data that we got last hour. It remains, though, still on the brink of a critical inflection point. They're below the 100-day moving average. A key technical support level could point to further pain for stocks. Positive economic news, as I just alluded to, the stock market swooning, but the ISM services industry rebounded in July, signaling expansion. Anything over 50 is expansion. Orders advanced in June. The data signal a sharp contraction in the service industry activity. And right now, as we look at the S&P 500, down 173 points, down 3.2%, 5175 in the index. The Dow Jones Industrial Average down 1,090 points. That's down 2.75%. And the NASDAQ is down 3.8%. That is a decline of 642 points. 2-year yield, 4 basis points lower. That's at 383. And the 10-year yield is down close to 6 basis points. That's now at 373. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. And that is your Bloomberg Business Flash. Paul.
John Tucker, thank you so much. We appreciate that. Jess Metten sitting in for Alex Steele.
She's hiding over there.
So we're here in the Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Well, we need some perspective on this market because we've seen some numbers we haven't seen in a long time, if ever, including some blowout of the VIX earlier today. It's still elevated here, but Abigail Doolittle joins us. She can provide context for us, that's for sure. She's a markets reporter for Bloomberg News, joining us here in our studio. Some morning of trading there, Abigail, huh?
It is some morning of trading, but it frankly reminds me of many other mornings of trading at times past. These kinds of sell-offs, they happen, it's cyclical, and this one's not that surprising. I mean, we've been tracking, excuse me, charts all year talking about the idea that all is not well, that there's a ton of bearish divergences, and that while indexes and some stocks were going higher, there were signs that they really shouldn't be, and that at some point they wouldn't be. And so today, and frankly, you know, for the last week or two, we've had the music slowing, and I wouldn't say that it's stopping yet. I mean, we're off the lows. The S&P 500 down 3.1%. The New York FANG index down 4%. Those are those magnificent 4.7. The Russell 2000 down 4.3%, which is interesting because the small cap, I think we had looked at it together, and I was saying it's going to go right back down, and that has in fact reversed. The charts are working magnificently right now.
Really?
I mean, they're just so good, and they suggest collectively more selling is ahead.
And because we have you here, I always like to pick your brain on the technicals, since you just brought up looking closely at those charts. So I know the S&P 500 broke below its 100-day moving average at the open, so that was sitting around 5,300. The 200 days kind of near 5,000 here. What are the technicals telling us at this point?
So, you know, in a market like this, I prefer to look at individual movers to know what the markets are going to do. But I will start off with the S&P 500. And one thing that I would note is last Friday, it gapped lower below the 50-day moving average. It actually closed below the 50 moving average or on it on Thursday, gap below it on Friday to that 100-day moving average, and then a large gap lower. That tells you the degree of shock that investors are in as they scramble again for those seats as the music seems to be slowing. We have the RSI at 30.5, so not quite oversold. This index has had a history over the last year of touching right down there and then back up. That said, right now, this index is floating. There's not a lot of support there. I wouldn't be surprised to see it drop down toward the 200-day moving average and see the RSI get a little bit more oversold than it had. Now, one reason to really think that is if we take a look at Apple, it looks like it's going to 170. If we take a look at NVIDIA, it looks like it's going to 80 or lower. I could go through so many stocks, the individual stocks beneath these indexes that really look like they're going to sell off. And I know that, especially in the financial media, we love to try to say, why? You know, it's very much as simple as that there's more sellers than buyers, and it has to do with this frothy environment, the animal spirits, too far, too fast. I mean, if you recall not so long ago, Chewy.com in a single day moved up 40% on the day on the picture of a cartoon dog on Twitter. If that is not the sign of the times of too much froth, too much exuberance in the system, I don't know what is. And then to see that in NVIDIA, a stock that a year and a half ago had a market cap of, let's call it, $500 billion, all of a sudden, in less than a year, being the most expensive company, just too far, too fast. Yes, the numbers are good, but you have to bring physics into it. Newton's third law, the equal and opposite reaction. So we're seeing a little bit of that equal and opposite reaction today.
I know you're also watching crypto. So if you look at the Bloomberg index, down close to 14%, on pace for its worst day since June of 2022. So how is that space? Obviously, there's a lot of different stocks that are related to that, like micro strategy, right platforms, other ones coming under tremendous pressure.
So I would say you want to start with Bitcoin, and Bitcoin we've been talking about for a while. Right now, down 8.5%. We've been talking for a while about the idea that it looks like it's going to go to its long-term uptrend around 40,000. While that could be painful for crypto holders in the near term, in the long term it's very healthy because it tells you that you're going to see consolidation right down to that support level where people very reliably buy it. Is it going to happen in all-in-one measure? We were down at 51. It seems like we'll probably make our way back up and then down. That's going to put pressure on the entire crypto space. I don't know how you have Bitcoin falling off and those stocks doing the opposite. In terms of earnings for some of them, maybe that could be a driver. I haven't watched those earnings too closely. Something I would say about Bitcoin falling off like this, the technicals have predicted it, but when the VIX was broken, today it clearly is not, at a 38 handle. It had been a 52 handle. It's back in action, measuring uncertainty or fear, however you want to look at it. But when the VIX, back in 2021, 2022, was stuck around a 10, 12, somewhere in there, people were like, well, let's use Bitcoin as a tell on risk-on, risk-off sentiment. So I would say today, Bitcoin is very much confirming the idea that there's a risk-off sentiment. And if it does, in fact, go where the chart suggests it will go, around 40, it suggests, along with Apple and NVIDIA and some of these other stocks that have just been up in such a phenomenal way, that, yes, we are entering a period of risk-off. And actually, we've been there for longer than probably a lot of people think.
Yep, absolutely. Okay, Abigail Doolittle, thank you so much for joining us. Abigail Doolittle, she's the markets reporter for Bloomberg, joining us here on what has just been a spectacular day for financial markets here to start the week. So fantastic has the movement been over the last several days that there are even some people out there calling for an emergency Fed rate cut to stem off what could be an impending recession. Our next guest says, I don't think so. Shouldn't do that. That would be a mistake. Marcus Ashworth joins us, Bloomberg opinion columnist. He is based in London. Marcus, you got a great column out here today entitled "Emergency Fed Rate Cut Would Be a Mistake." Why do you say that, Marcus?
Well, not only do I think it's a mistake, but I don't think it's going to happen in the sense that I just don't see Powell's modus operandi is not to panic, is not to react. Bear in mind they did cut twice into meeting in March 2020 because that's the pandemic. This is, two things behind this. This is a revaluation of the yen, and this is a over-leveraged stop loss, fundamental wiping off of the froth from an over-leveraged stock market. So this is not the Fed's job. There's nothing fundamentally wrong with the economy. There is quite a lot fundamentally wrong with leverage, perhaps, in the stock market. So I'm not saying that the Fed should not cut. I think it very much should do. It possibly ought to have done it last Wednesday, but it didn't, and that's fine. It means it can cut either 25 or 50 on September 18th, and it doesn't really matter which one they do, but I do think they need to make clear that if they do just go 25, that won't be it for ever a day, a bit like the ECB and the Bank of England are trying to convince us. Both the ECB and the Bank of England, by the way, will follow straight in line with the Fed cut, which I'm sure will come on September the 18th. Just not pleased before up some mountain in the Teton Range in Wyoming.
So how are European markets holding up at this point?
They're okay. I mean, the FTSE 100, which is the UK index, is it doesn't go up as much as the others, and therefore it shouldn't fall quite as much as the others when things come down. I think everyone's deleveraging. This is risk off. This is collapse your positions. Anyone who didn't have a wise risk manager on their shoulder in August, is learned their lesson. And I think it's just a reduction of risk and positioning all round. The services ISM number today, I think, is very timely to calm a little bit of overreaction. We have to bear in mind what goes on in Japan doesn't always stay there, but this was a very leveraged retail investor market as well, domestically, let alone foreign investors have been dribbling in as it got to new highs in the Nikkei. So everything needed a bit of a clear out, perhaps long overdue, particularly on dollar yen. This has all spilled over into a bunch of different things. But you actually look at money market rates and spreads between term, overnight versus 3-month or 1 year, and various other GC or repo measures. This is not a panic hitting the money markets or the banking sector or about liquidity. This is just stop loss.
Marcus, you may be aware that in my employment contract, I don't work Fridays in the summer. So I leave the studio Thursday, and we're talking about soft landing with like every guest I had. And then I come back in today, and we're talking about emergency rate cuts.
Right, what changed?
What happened Friday, what I missed?
Well, you got a weaker than it's been a long time coming, this weak payroll report. I've been hoping or expecting for a few months. So look, and it wasn't necessarily that weak if you put a little bit of question mark, obviously, what Hurricane Beryl may or may not done. But I just think it's confirmation of a number of different things have been going on. Clearly, Powell on Wednesday had sort of dampened a few things down. One thing he said he didn't expect, wasn't looking for a larger, i.e. a 50 basis point rate cut to come. He may change his view on that, I suspect. But for the moment, he downplayed it. After we'd had a couple of important ex-Fed people, particularly Bill Dudley on our own newswire, say he's changed his view from being very hawkish to saying, look, we need to cut rates. So I think the market had got itself almost, hopeful of a 25 basis point. Didn't get it on Wednesday. Got that weak payroll report, and obviously we've got a major league wipeout in Japan, which has just knocked a few things. You could chuck the Buffett thing in, the fact he's been selling over a course of the last quarter, Apple and Bank of America, but that, to my mind, is just because he's banking some profits, rotating into when the right opportunity is for a bigger value play, which it just got a lot better for Warren Buffett. He may be 97, whatever he is, but he's still sharp on the rest of us, eh?
Walk us through, especially when you're thinking about the global central banks and obviously the ECB, the Bank of England versus sort of the Fed's path, and then obviously the Bank of Japan now on a different type of course.
Yeah, well, the Bank of Japan has been playing up till now anyway, I think very smartly. They've been waiting for the Fed to cut rates, That's obviously taken a bit of a while. We're waiting out September, at least with the ECB and the Bank of England, Swiss Bank, National Bank, a few others, or Bank of Canada, etc., have gone ahead. They've been waiting their time, but I think they felt they needed to get a move on and lift above positive at long last. The more important thing, I think, for the Bank of Japan was they said that they were going to halve over the next 2 or 3 years their purchases of JGBs. That's the liquidity question rather than a rate or monetary policy in the classical sense. That's quite important. I think that's one of many reasons why I think the Japanese stock market sold off so viciously, combined obviously with the sharp move in dollar yen, which has created and brought a lot of people back home, but in some senses not into their stock market, but back into safety plays like the bond market. So unwinding a lot of positions. I think that's what the Bank of England and the ECB do now are very much driven by the Fed. So I view them as vassals. They're merely following on. They may have gone ahead, but they're following the wagon train, and there's no doubt about it who's really driving.
All right, Marcus, you folks in the UK, you have yourself a new government here. How's the man and the woman on the street? How are they feeling these days about the UK and the economy and everything?
I may put myself into some complications if I answer that truthfully. There has been a rather a lot of headlines saying that Labour's honeymoon is over. Well, they've gone at it very hard. A lot of things that they never actually said in an election campaign, they've gone ahead and done, particularly on the fiscal front. They've rattled the horses for sure. I'm not a huge worrier about, we've had some disturbances on the streets and some say minor rioting, but I mean, we don't have major looting and a real serious issue there. But that's certainly taken the shine off the economic news in that context, which has been actually really positive up till now for the UK. But I think the new government's got itself a real lesson in that they are governing now, not an opposition, and the things that they say are very important, and they can't just come up with anti-rhetoric and hope to get away with it. So certainly a short, sharp lesson in every sense on what real world looks like.
All right, Marcus, thanks so much for joining us. Really appreciate getting your thoughts. Marcus Ashworth, he's a columnist covering European markets for Bloomberg Opinion. He's got a column out today, very prescient and very timely, basically saying emergency Fed rate cut would be a mistake. So keep that in mind. Looking at these markets here, the S&P is off 2.5%. The NASDAQ's off 2.7%, both off of the lows, but it's trading down sharply nonetheless. Looking at the yield space, coming back here, we got the 10-year Treasury only off 1.5 basis points here, 3.77% on the 10-year. The 2 years trading at 3.88%. So that inversion, we were disinverted, I think is a correct term for like a cup of coffee, as Tom would say.
That's right. And then an update here on Schwab and Fidelity traders reporting those outages during the midst of this sell-off. So more than 15,000 users reported an outage at Schwab around 9:50 a.m. New York time this morning. But that number had dropped to more than 3,000 outages as of 10:53 a.m. here. So we'll keep you posted on how this all develops.
All right, we're going to have more coming up here. Again, the S&P 500 off 2.4%, the NASDAQ off 2.5%. We'll have more coming up. This is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg News. And with this Bloomberg Business Flash, the sell-off continues, but we have paired some of the earlier declines. For the S&P 500, you have fewer than 30 stocks in the green today, while more than a third are down at least 3%. Bloomberg Gauge, the so-called Magnificent Seven stocks, pairing its decline after plunging by a record 9% at the open. For the S&P 500, it would have to fall to around the 5,100 level to officially enter a correction. And big volume day, up over 82% that we'd normally see this time of day. There is some green on semiconductor, bucking the trend, up close to 3%. Now, what's behind all this? Bank of Japan, that's one culprit. The rate hike July 31st that helped hike the yen rebound from near a multi-decade low. The currency rapid surge there hammered earnings prospects for exporters, so that caused equities to tumble there. The Nikkei fell over 12% overnight trading. Right now, the S&P 500, 129 points lower. That is down 2.4%. 52.18 on the index. The Dow Jones Industrial Average down 918 points. That's down 2.3%. And right now, the Nasdaq Composite Index is down 425 points. That's a decline of 2.5%. The two-year yield is now up close to 2 basis points, 3.89, and the 10-year unchanged right now. That's a turnaround.
Yeah.
Right now at 3.79. Let me check the market's view all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Jess and Paul.
All right, John Tucker, thank you so much. We appreciate that. Jess Menton sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube, so head over there and check us out. Markets off 2.4%, the S&P 400. So a lot of folks are saying, is this just a natural, healthy pullback in what is otherwise a pretty solid market? Or is this the beginning of something more on the downside? People trying to get a sense there what's going on. Carol Pepper, founder and CEO of Pepper International, joins us from New York via Zoom. Carol, what are you hearing from your clients? What are you telling your clients on a day like today? We've had a big move in the markets.
Yeah, I'm telling my clients, keep calm and carry on. This is a little bit of a pullback, but not unexpected. When Warren Buffett went and sold half his Apple position, that made people nervous. But frankly, the fundamentals have not changed. The fact that there's a slight correction, nothing will go up every single day forever into infinity. And if you think that it will, then you shouldn't be in the stock market because it never does that. But you have to look at long-term trends over time. Growth stocks, and particularly the Magnificent Seven, have done extremely well. Should there be occasional pullbacks? Yes. But does that mean that we're in serious trouble? No. So if you hold these stocks and you're nervous right now, this is not the time to sell. Obviously, even the plunge from this morning has pared back its losses. Some of this was the fact that a lot of the traders are on vacation. So whoever is in the market is moving things around much more than they normally would when it would not be in the middle of August.
What are the top questions you're getting from your clients?
Well, obviously, people wonder, is this the beginning of the end? Have we run as far as we should? Should we be pulling everything back? And again, I manage money for people with over $100 million who have single-family offices. And we make bets, not unlike Warren Buffett, not that I'm as good as him, but we make bets for multiple generations. So again, if you look over the last 5 or 10 years, how much has growth and tech in the U.S. outperformed everybody else? AI is the new entrant into the tech scene. It will continue to outperform. Will there be moments like now when maybe the market enthusiasm got ahead of the reality of where the price should be? Yes. But does that mean that it's going to plunge to zero? No. Are we having a dot-com crash? No. Why? Because there's actual earnings underneath these stock prices, whereas in the dot-com day, there was nothing underneath. It was all air. So for that reason, I tell people, yes, it looks scary. No, don't do anything. This is a typical August doldrums, buy the news, sell the news kind of market movement that we see almost every summer.
So where should people, if they maybe want to look for some values here in a market that's pulled back a little bit, where are you suggesting they go first?
again, if you're underweight in tech, depending on your own weights, this is a great time to get into tech. If you want to get in, having the price drop 5 or 10%, terrific. Get in now if you're not in there. If you're not wanting to kind of test or bet when things are going to move one direction or the other, just sit in cash, let this settle out for a couple of days, and then proceed in an orderly fashion as usual with your investment program. So I'm telling people just to remain calm. I don't think this is the beginning of the end. I don't think Warren Buffett was doing something sinister. I do believe him. What he said, it was a tax move on his part to sell half of his Apple position. So, just calm down, everybody. It's going to be fine.
When you have the 10-year last week sliding below 4% for the first time since earlier this year in February, and then you have obviously income kind of driven type bond proxy sectors, utilities, REITs that were taking in a large amount of the inflows, especially since that CPI report on July 11th, as well as last week when we saw that sell-off accelerate the last few days. Are you putting money or suggesting clients put money in those particular corners of the market that would obviously benefit from rate cuts?
Yeah, I do think the rate cuts are coming, and I hope that we will go back to having at least 2 rate cuts this year, maybe September and November. So certainly if you're underweight your fixed income and you've been just relying on, good positions in your cash accounts, those rates are going to go down. So perhaps the time to consider getting into bonds a little bit. But again, you can never time exactly when that's going to happen. Will you hit it exactly? No. Who may hit it exactly are the program traders, not human beings. It's impossible to outtrade this market, so you can't be that smart. But if you've been sitting in very high cash yields and you're worried about where cash yields are going to go, which is down when they start cutting the rates, then yes, it may not be a bad time to put a little bit more into bonds. But timing that date is still going to be tough.
How about, I don't know if you have any views on crypto, but that's been whacked all over the place today with Bitcoin off about 8% today.
Yeah, well, again, there's fear days and there's greed days. On fear days, everything that looks risky, quote unquote, goes down. So crypto is considered a risky or a growthy asset. So of course it's been hit, but I know a lot of people who are buying massive amounts of crypto right now, particularly overseas. I work with a lot of international families, and there's a lot of reason why people are starting to substitute crypto, in some cases for their own currency, or using crypto to move money around the world. So that's going to continue to happen. For people that are hoarding crypto, this is a great day. They can go out and buy some more, and they all would project within 2 months it'll be back up into the 60s, maybe back to 65.
All right, Carol, thank you so much for joining us. Always appreciate getting your thoughts. Carol Pepper, founder and CEO of Pepper International. Let's go to the credit world here. The question for a lot of folks is we're seeing the treasuries just kind of whipping around. We were down to low with the 10-year treasury. Low today is 3.66%. We're back to 3.79%, so big movements in the treasury markets. Where do you go in the credit markets? Only one person to question, in my opinion, Noel Hebert. He is Bloomberg Intelligence Senior Credit Strategist, joining us from Princeton, New Jersey. So, Noel, you see some volatility in the market like we've seen over the last couple of days. What are you seeing? What's the market telling you?
So far, not really a lot, right? Because, I think, if you're looking at, you mentioned sort of the volatility, particularly that we've seen in the rates market. So if you look at corporates, which is obviously sort of my own milieu, right now it's just sort of cash prices sort of frozen a little bit and sticky in response to that rates action. So spreads have moved wider, but you think about high yield for last week, spreads are wider by 53 basis points, but the index was basically unchanged, i.e., you didn't really lose any money in it because people are still sort of just holding on, right? So we haven't seen a response yet. I think we need to see sort of where this trade goes, over the next couple of days. Is this sort of a real risk-off pivot, or is this sort of something more that's just, as the prior guest was sort of alluding to, where it's just sort of a summer kind of phenomena where you got low liquidity and everybody sort of runs for the exit at one time, and then they all pause and go, oh, wait, actually, we want to be inside the building. So we'll see.
What are the U.S. corporate credit markets telling us? Was it overdue for a correction?
So yes and no, right? I think spread-wise, we've definitely been at relatively tight levels for a long time now and sort of moving sideways in both investment grade and high yield. And if you sort of looked at the underlying fundamentals and what we've been seeing in terms of the economy with some of the softer consumer numbers, some of the softer manufacturing numbers, and then, of course, payrolls last Friday, we definitely should have been at wider levels. That said, sort of as, I just mentioned, like if you look at sort of the spread action that we've gotten wider, so it's a better risk pricing environment right now. But right now, it's all in just response to how quickly rates have moved, right? So investment grade as an index was up 2% last week, even though spreads widened out. So it's still, not an environment where people are actually running for the hills or just sort of holding on to their positions and sort of waiting to see how this dynamic unfolds a little bit.
So, Noel, what sectors are screening well for you right now? I know you mentioned that spreads are tight here. Does anything kind of jump out at you?
Well, I think it depends on whether you think we're going into recession or not. And I think, financials were sort of always set up reasonably well for sort of a risk-off move just because of the shorter duration profile and just where they're exposed in terms of the shape of the treasury curve. We've gotten a lot of that repricing really in 2 days, so it's hard to say if they're still there now. I think, energy is another place where you got to kind of keep an eye on that, given all the geopolitical tensions that you have around the world. If you can kind of hang on to kind of $70 plus type oil prices, that's a sector that should continue to do very well in terms of relative performance terms. And then on the other side of the coin, I think the cyclicals, your consumer cyclicals and maybe some of your capital goods sectors are maybe places where you want to be a little bit more mindful of sort of what kind of macro climate we're in right now. I personally think, I don't know about recession per se, but I think we're definitely heading towards a much softer environment that needs to be more carefully managed, both by the Fed and obviously from a fiscal policy standpoint. But we'll see. Again, I don't have any more of a crystal ball than anybody else. So,
you also wrote in the terminal about how investment grade's best week since December obviously comes with a bit of a caveat. What is that?
Mm-hmm. Yeah, so I think the caveat is really, again, it comes because we got such an aggressive move in rates, whereas we did start to back up and spread a little bit. I think and we're seeing it actually in real time right now, rates are starting to settle out a little bit. A lot of the, sort of the risk off bid in the morning is sort of tapered off and we're sort of flat in the front end right now. So in this environment, I think if we see corporate credit spreads continue to drift wider, even as the sort of the treasury trade settles out a little bit, then I think you have to be very mindful of how aggressively we may reprice risk through here. I don't get super into the technicals, but I'm very mindful of the technicals, and we broke through both an investment grade and high yield sort of prevailing resistance levels, which means we could go much wider and spread on both. And if you don't have sort of the treasury trade to sort of back you up and deliver returns for you on the other side of that, that could mean sort of some negative performance over the coming days and weeks.
Noel, great stuff. As always, Noel Hebert, he's our senior credit strategist for Bloomberg Intelligence, joining us via Zoom from our Princeton, New Jersey office, giving us some good thoughts here on the credit space. Just a quick recap, S&P 500, we're off 2.4%, as Noel said. We're just kind of hanging at these levels right here after that initial kind of panic in the futures and then at the open.
Yeah, and the Bloomberg index for the Magnificent Seven stocks down 3%, worst day since July 24th. But to your point, Paul, coming off those lows that we saw earlier this morning.
So we'll keep an eye on that. And as John Tucker was pointing out before, some good volume, I guess as you would expect on a day with a big move. People kind of getting some, getting off the beach and actually putting some trades in, I guess. So we'll have to see how that plays out. The S&P, again, off 2.45%. We'll have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. From New York to London and Tokyo, equities are getting pummeled right to the numbers here. We've got the Dow, the S&P, NASDAQ 100 index, Russell 2000, deeply in the red. S&P right now down 120 points. That is a drop now of just about 2.3%. We are off session lows. We've got the Dow now lower by 800 points, a drop there of 2%, while NASDAQ, the composite index, down 435, a decline of 2%. The Russell 2000 index now lower by 3%. 10-year at 3.79% with a 2-year yielding 3.89%. Spot gold down 1.5%, 24.07 the ounce. West Texas Intermediate crude down 0.8%, below $73 a barrel. WTI right now 72.88. We've got Bitcoin plunging by 7.3% with a 54,000 handle right now. 54,813 on Bitcoin. U.S. service industry activity improved in July, a dose of positive news as the stock market swoons. And with that story, here's Bloomberg's Vinny Del Giudice.
It's a modest rebound, but a rebound nonetheless. The ISM reports its non-manufacturing index rose to 51.4 last month, signaling expansion. Orders advanced. In June, the data signaled a sharp contraction, the sharpest in 4 years. Services account for roughly 90% of America's business activity, and July's bounce back could help allay worries about the U.S. outlook. Vinny Del Giudice, Bloomberg Radio.
And as we have been telling you, tech stocks particularly hard hit today. Case in point, NVIDIA down 5.3%. Apple shares now down by 4.2%. Microsoft down 2.4%. And Intel, which plunged 26% on Friday, down again today. Intel down another 5.8%. So again, recapping here, stocks lower. S&P down 2.4%. The 10-year 3.78%. The 2-year 3.88%. Keep it locked into Bloomberg Radio for the very latest as we cover the continuing sell-off on Wall Street. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Jess Metton sitting in for Alex Steele. I'm Paul Sweeney, and we're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube. And you can find us over there at YouTube, a podcast for Bloomberg Podcast. That's where you can find us here. All right, the bad news is Charlie was reporting the S&P is off 2.4%. The good news is it's kind of like the intraday high. I mean, it's bounced off the lows here. I'm looking at the Bloomberg Commodity Index. That's a little bit weaker today. So let's talk commodities here. Let's get the latest. There's a lot going on here across the board. Miami Mike McGlone, Senior Commodity Strategist for Bloomberg Intelligence, joins us on Zoom from Miami, Florida. Mike, what's your commodity call today when everybody's probably saying, what is going on out there in financial markets?
We're seeing sell what you gotta, not what you wanna, and that's really affecting. It's typically you've seen this happen in the past. When beta goes down to this velocity, you sell what you have to have. So that really started this weekend. Bitcoin broke below 60,000. It hovered there on Saturday and then broke through there on Sunday. So it was your indication. We'll start with the world's most significant leading indicator, and there's a lot of people who speculate in it. So that was like people had to sell that because they need to raise capital. You're seeing it in gold. That really started, similar beginning of 2008. When we had the financial crisis. The significance of things like gold and copper going down is they're perfect goddess sellers, but gold will probably do better. The thing is, managed money net positions, speculators are way long gold for a reason, because it's a bull market. So they're liquidating some of that, but I think it's more likely to cover. And the difference then is crude oil. Crude oil's hanging in there. It's only down 1%. On a day like today, it'd typically be down more than the S&P 500, but we know there's geopolitical tensions, escalating. And a lot of the futures positions were way sold out about a month ago. So crude oil is not way overweight long like gold is. So that's where you've seen some of the greater, I think, pressure on gold, at least for today. But in the long term, as this resolves itself, we see that if beta is clearly making a little bit of a high and volatility is making a bit of a bottom, gold will be one of the primary beneficiaries.
And looking over at the crude oil market, WTI for those U.S. futures falling to around $73 a barrel. As far as what could be coming ahead here when you're talking about looking at the commodities space, what do you think this tells us more kind of broadly about the economy and the potential direction here for the U.S. stock market?
Well, it's deflationary forces, and I'm glad you went there, Jess, because I've been writing about this for a little too long, but particularly this year, commodities basically predicted this, with gold going up and all commodities going down. The Bloomberg Commodity Index on a one-year basis is down 6%, and the S&P 500 on a one-year basis is up about 21%. That's 1 year. That's signs of deflationary forces. And I think what's happening is those autocorrelation forces in commodities, they go down because they go up, are trickling down to other assets. So I don't see this as something as a one-off. It looks like it's just getting started. And then you tilt over. Why? Well, here's one good indication. The 10-year note yield in China is 2.15%. That's compared to 3.79 in the U.S. So China's heading towards a pretty severe deflationary recession if you watch their bond yields. And I think that's what's happening. And it's happening globally. So commodities have basically been predicting this. I think we're just seeing a little bit of trickle down from the stock market that's way elevated. Now, I'll end with this. The Bloomberg, the 200-day moving average on WTI crude oil is about $78 a barrel. And markets, that's tilted lower. We're right now about 73. The 200-day moving average on the S&P 500 is 5,000. And the S&P 5 index is about 5,200. We're just potentially going to revert there. And commodities were kind of a good indicator for that. And Bitcoin was one of the quickest indicators, I think, for what's happening.
So for WTI crude oil, let's just continue there, Mike. Is it a supply issue driving this pullback here, or demand, or maybe a little bit of both?
All the above. The first thing you have to remember is the key force that pressured crude oil since the peak in 2008 is that the excess of supply and demand out of the U.S. and Canada is accelerating. It's about 6 million barrels a day. In 2008, it was a deficit about 10 million barrels a day. That's about what you see from that increasing excess of spare capacity out of OPEC. So see the bad trend there? And prices remaining high because of geopolitical tensions are keeping that force intact, meaning the cost of production in the U.S. is around $55 a barrel. In Canada, it's around $60 a barrel. So you keep prices above those levels, they'll just produce more, and it's reducing demand. Diesel demand in this country is in a downward recessionary trajectory. And I hear it's the same in some of the other countries, most notably China. It's just harder to measure. So that's the problem. Geopolitical tensions are keeping it elevated, and it's just going to be pushing back towards its cost of production in the U.S. if all the rules of economics apply. So I'll give you one example. The number one measure of heat, electricity, and fertilizer in this country, natural gas, has already done that. It dropped to, and earlier in the year, the levels that were first traded in 1990. Corn has already done it. Corn has dropped to a level first traded in 1974, back down to $4 a bushel. So this is just normal in commodities, but it's deflationary because they went up too much. The question is how normal it is for stock market volatility to bottom and stock markets go down, and that's what really pressures crude oil. When stocks go down like this, it'll bring down crude and copper.
Another corner that you keep a close eye on is petroleum futures. So you were talking about in a note recently how managed money, when you're looking at the hedge fund positions in particular, are set up for a bear market. And then obviously when you were pointing out too how the stock market mean reversion might be a particular deciding factor, what does this mean now moving forward, now that you're seeing stocks under pressure here?
Yeah, so I think that's part of the main reason, despite the imminent attacks and more violence in the Middle East, which might curtail supply, despite that overhang in the market, crude oil is going down, and despite the market has really sold out, you mentioned from futures, it's going down partly because beta is going down. It's the power of beta. When the stock market goes down like this, it's all that matters. So this is something that's really been a great indicator this year. If you watch these speculative futures traders, when they get way too long, usually it's when the market peaks, and that's what happened this year. And when they sell out, they typically don't get short petroleum futures, but when they sell out to levels that are basically flat, it typically marks a bottom. Well, that's what happened this year. And now we're kind of in that range is what's the next key level. So our next key step too, in WTI crude oil, there's like a line of sand support around 70,000. I think it's a matter of time it follows that, it goes below that level. Natural gas has done it, corn has done it. But right now, what's keeping it elevated is futures are basically sold out. We kind of have to reset those positions, and those geopolitical tensions are keeping things somewhat elevated.
All right, Mike, great tour de force. Really appreciate it. Mike McGlone, Senior Commodity Strategist, Bloomberg Intelligence, zooming in from somehow he scammed us, Miami, Florida. I don't get it, but he is a winner. He is a net winner during this whole global relocation. That is for sure. The Summer Games updates all day are brought to you by our good friends at State Street Global Advisors. So we appreciate getting their support. Their S&P 500 off 2.4% here. NASDAQ off 2.8%. This is Bloomberg. Good morning.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Charles Schwab and other retail brokerage users are reporting outages as global stocks sell off. That all began this morning when the market opened, the New York market opened at 9:30 a.m. Wall Street time. Now, according to the website Down Detector, more than 15,000 users initially reported an outage, but that as of 9:50 this morning, that number has now dropped to more than 3,000 outages. Right now, we have got shares of Charles Schwab lower by 1.5%. Indeed, a brutal day for tech names, including NVIDIA, Tesla, and Apple. Right now, we've got NVIDIA shares plunging by 6.2%. Apple shares, they are lower now by 4%. Dan Ives is a senior tech analyst with Wedbush Securities, and on surveillance this morning, he told us he is sticking with the mega cap tech names despite today's sell-off.
This is a once-in-a-40-year cycle in terms of where we see this AI revolution playing out. Now, obviously, these stocks are going to get crushed. When I look at names like Microsoft, you look at names like Oracle, NVIDIA, Palo Alto, of course, Apple, Tesla and others. For the high-quality names that I believe the thesis is there, you own them. And that sort of, and I would just say, in 24 years covering tech, these types of panic periods, the hand-holding, that's proven to ultimately be, I think, the right course for those types of names.
Dan Ives of Wedbush. Shares of Apple suppliers are slumping after Berkshire Hathaway over the weekend nearly halved its stake in the iPhone maker. assembler Hanhai Precision Industry and chip maker Taiwan Semiconductor, both lower right now. We've got Hanhai down by 9%. Those are our top company stories at this hour. I'm Charlie Pelletin. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, Jess Benton sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. So go search Bloomberg Podcast, and that's where you'll find us. Looking at the 10-year Treasury yield, Jess, 3.78%, pretty much unchanged on the day. It did touch a low of 3.66% earlier, so some big movement in the Treasury markets, showing the volatility that we see out there. Let's check in with Ira Jersey. He's Chief U.S. Interest Rate Strategist for Bloomberg Intelligence. Hey, Ira, when I came in this morning, there was a real sense of panic out there. It's since subdued a little bit maybe, but there's even, viable talk about an emergency rate cut for the Fed in response to maybe some of the economic data we saw last week. Is that even on your bingo card at all?
Well, I think that the market is getting ahead of itself when there's a lot of this talk by both the financial media and some investors, particularly, I think investors in assets that are going down 4 or 5%, right? They're hoping for a bailout from the Fed. But the Fed is going to look at the economy, right? And that's going to be their primary focus. So the idea of an emergency cut, I think, is very overblown. The other thing, when you look at the pricing for it, though, it's not a 0% probability. And when you look at the market, the linear market, so things like the federal funds rate and overnight index swaps on the Fed funds rate, which are different traded instruments that people use to bet on such things, it's really saying, okay, there's a small chance of a 25 basis point cut and an extremely small chance of a 50 basis point cut, but on average, that means that maybe there's a 5 or 6% chance that the Fed's going to cut before the September meeting. I think what's more interesting about today's moves is that basically the bond market is saying, okay, look, 2% down in the stock market is not a big deal, 4% is, and that's kind of where we're kind of what's playing out right now. Now with the stock market, basically coming back about half of what it was losing this morning pre-open. The bond market's saying, okay, 2%, whatever, it's not that big of a deal.
I'm glad you're here because I wanted to pick your brain on speculative net positioning when you're looking at the futures market, specifically for bonds, because I was looking at the CFTC data for the 10-year net non-commercial futures positioning. If you look through the latest week, it was near those extremes as far as what it looks like, as far as close to the most ever there. How do you unpack what the positioning is actually telling us right now?
Yeah, so a lot of the spec positioning, you have to realize, is it's, a lot of those spec positions are customers who and clients of the CME that have other positions against that. So a lot of those are hedges. So a lot of what the shorts in say TY futures, right? So 10-year Treasury futures, those are against things like people who own corporates or people who own mortgages, or maybe that's just a hedge to another interest rate sensitive position. So they're trying to kind of immunize themselves for if rates go higher. But that being said, there probably were some people who were getting shorter and shorter as we kind of broke below 4% last week.
Right.
Keep in mind, those net positions are kind of old at this point, right? Because you get those net positioning is as of Tuesday night, and now it's Monday. So those are basically 4 trading days old. We don't know exactly how positioning changed on Friday. We can guess based on volumes and changes in open interest, but we don't know, who those investors are.
Right.
The other thing is that keep in mind, people always say, is the market long or short? Well, the market's always neutral, right? Because people, particularly in the derivatives markets, because for every short there's a long. So it's not like it depends on who is long and short, not so much if the market is really leaning one way.
All right, Ira, thanks so much for joining us. Always appreciate getting some of your thoughts there. Ira Jersey, Chief U.S. Interest Rate Strategist for Bloomberg Intelligence, joining us on the phone from Princeton, New Jersey. S&P 500 off 2.3%, the NASDAQ off 2.8%, the Russell off 3.1% on the yield front. We're pretty steady there. The 10-year Treasury 3.78%. WTI crude oil off 0.5%, $73. And Bitcoin, I'm calling it out. It's off 8%, $4,800 to the downside, 54,300 is your level there. Balance of power with Joe Matthew from Washington, D.C. He's got a lot to talk about. Things are heating up down there. We get a VP pick any day now. Joe Matthew, Balance of Power, Washington, D.C. That starts right now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
The campaign enters a new phase in the teeth of the sell-off. Welcome to the fastest show in politics as the Kamala Harris campaign prepares to announce a running mate. And Donald Trump blames her for the losses today on Wall Street. We'll talk it all out with Mick Mulvaney, the former acting chief of staff of the Trump White House, former congressman and former co-founder of the Freedom Caucus. On the markets today, Barry Riddles will hold our hands as we try to take a look at the long game here, and we'll have analysis from our signature panel. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us on the Monday edition, and we start, as always, with a look at Wall Street. Let's rip off the Band-Aid first right now with Charlie Pellet in New York. Charlie?
Thank you very much, Joe, and indeed, let's get right to the numbers. Fast-moving markets to the downside. The Dow, the S&P, NASDAQ all down now by 2% or more. The S&P down 2.4%, lower now by 129 points. So the S&P now checking in at 52.16. The Dow below 39,000, 38,920. A drop now of 816 points, have been down more than 1,000. Right now we have got the Dow lower by 2.1%. The NASDAQ Composite Index, hard hit, down 3% now, a drop there of 508 points. The NASDAQ 100 Index down 2.6%, while the Russell 2000 Index lower by 3%. The 10-year, 3.78%, with a 2-year at 3.90%. Gold down 1.6%, 24.03 the ounce. And West Texas Intermediate crude oil down 0.4%, 73.25 for a barrel of WTI. Bitcoin down now by just about down to 7.8%. We've got Bitcoin right now at 54,520 on Bitcoin. So a sell-off in the riskier corners of the global market deepening, stocks tumbling as concerns about a slowdown in the U.S. economy spurs speculation that this year's equity rally may have gone too far. Victoria Fernandez is chief market strategist at Crossmark Global Investments.
Do you go in today? I'm not sure. I think you take a little bit of a break today with what we're seeing in the market. Let things settle out a little bit and then start looking at some of those names that we mentioned, some of those more defensive, more staple plays in your portfolio, and building those up while trimming some of your other ones.
Victoria Fernandez, chief of Crossmark Global Investments. So again, we're looking at Apple now, lower by 4.4%. NVIDIA down 5.8%. In Intel shares, they are extending their declines from Friday, down another 6.1%. Microsoft right now down by 2.1%. And Tesla shares lower by 3%. So again, recapping, equities selling off. S&P down by 2.3%. Keep it locked in to Bloomberg Radio for the very latest on today's Wall Street sell-off. Balance of Power continues. Back we go for more from Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet, great roundup, Charlie. As difficult as it is to listen to, we'll keep tabs on things around the horn here. We have 2 hours of politics every day on Bloomberg, and with the help of Charlie Pellet and the rest of our markets team, we'll keep tabs on this global sell-off that is now underway here. Donald Trump weighing in as we paint out of 3 buckets today. You're used to this. 3 plates spinning, markets, presidential campaign by way of a running mate announcement from Kamala Harris today, and then, of course, what is or is not happening at the moment in Israel. Coming off the markets, Donald Trump on Truth Social, of course there's a massive market downturn, he writes. Kamala is even worse than Crooked Joe. Markets will never accept the radical left lunatic that destroyed San Francisco and California as a whole. Next move, he says, the Great Depression of 2024. We'll talk to Mick Mulvaney, as I mentioned, coming up about the contours of this campaign that seem to be changing by the moment. But the situation in Israel has us all guessing as Israel braces for an attack, a retaliatory attack by Iran. We talked about it Thursday, Friday, still nothing over the weekend. And Antony Blinken had some words for his counterparts at the G7. We want to get up to speed on things, on the story that, frankly, no one is talking about because of all the rest of this stuff. Ian Marlowe joins, Bloomberg senior reporter, here at the table today. It's great to see you again, Ian. I know that you've been watching this very closely. There's been a lot of reporting around this about what's imminent, about what might be about to happen or not be about to happen. What are you actually hearing?
Yeah, I think everyone is bracing for something. I think U.S. officials believe something could happen as early as today and tomorrow. I think, obviously, as you said, we've all been on edge since, waiting over the weekend to see if it was gonna happen. I think everyone right now is trying to see whether, when this comes, whether it's like the attack that happened back in April, which a lot of people thought was designed to be intercepted. So Iran sent a volley of missiles. Most of them were intercepted, and there were, it did not lead to any escalation. Right now, people think the situation is a lot more febrile, a lot more, Iran has a lot more reason to retaliate now. Hezbollah has a lot more reason to retaliate. So I think people are bracing for something bigger. It's just the question is, what does it look like when it comes? And is Israel able to then not escalate again? I mean, that's the big question after Iran. It's
can we do again what we did in April, essentially? This, of course, would be in retaliation for the assassinations of officials with Hezbollah and Hamas. Has Israel actually confirmed that it was behind both of them?
Yeah, it claimed the Hezbollah assassination, but has not claimed the Hamas one. But
which took place in Tehran.
Exactly. I mean, this is everyone is thinking that is just that's bound to escalate the situation, and the U.S. has been pushing this sort of Biden endorsed ceasefire process, and you have Israel assassinating one of the main negotiators for that ceasefire proposal that Biden has kind of insisted Netanyahu take, get this to a yes, get this deal done. So I think there's many in Washington right now who are a bit frustrated with what's happening. The ceasefire process that they hoped, again, we saw this prisoner swap the other week. It was a diplomatic coup for the president. They hope to get some kind of ceasefire deal. And we are as far from that now as we've been. Just as last week, they were saying we're closer than we've ever been. Yeah. So it's
well, on that G7 call, he indicated they were close to a breakthrough until the assassinations took place. How far away are we from one now? I mean, is this off the table?
Yeah, I think there was always some key disagreements over whether Israel was effectively going to let Hamas survive this intact in any form. And right now, I think the U.S. feels like Hamas, they've got to stay optimistic about the process. They don't see any other way of this situation resolving itself. Hezbollah is not going to stop attacking until the Gaza war is over. Everything is going to remain tense until Gaza is solved. And yet at the moment, no one's talking about Gaza. We're talking about assassinations in Tehran. We're talking about Lebanon and everything. So I think at the moment, we're still pretty far from a deal. And I think it's just actually now it's down to logistics. I mean, the U.S. has always thought they could continue these negotiations without Hania, the Hamas official who was killed, the guy who was in Qatar. But at the moment, I mean, it's hard to see how this pushes forward, or accelerates, given they killed the guy who was negotiating.
Well, sure. And against the backdrop of a U.S. election, you do wonder how noisy things are going to get this fall. Ian, it's great to have you. Thank you so much. We learn something whenever we have Ian Marlowe at the table, specializing in diplomacy by way of the State Department here in Washington. I'm Joe Matthew. As we balance, as I mentioned, a few stories today with our eyes on the campaign trail and an announcement that could come at any time between today and, say, this time tomorrow from the Kamala Harris campaign. The reason why we say that is because her first event with her new running mate is set for tomorrow afternoon. So here we are, knowing that she met over the weekend with the 3 finalists at the Naval Observatory, that is where the vice president lives. And all the while, Donald Trump was in Atlanta, spoke to the same room, as a matter of fact, different people, but in the same room that Kamala Harris held that big rally last week that everybody made a big deal about. It was another stem winder by the former president. Here's Donald Trump in Atlanta.
Your governor, Kemp, and Raffensperger are doing everything possible to make 2024 difficult for Republicans to win. What are they doing? I don't know. They got something in mind, you know, they got a little something in mind. Kemp is very bad for the Republican Party. He wouldn't do anything.
What do they have in mind? This attack on Governor Kemp, of course, very popular in Georgia, was resonating on the Sunday morning shows. And a lot of folks are wondering if this is, in fact, the same old Trump, maybe not entirely reformed following an attempted assassination attempt. Mick Mulvaney knows all about it, the former acting White House chief of staff, former director of OMB, former member of Congress. In fact, he co-founded the House Freedom Caucus and a regular voice on this program. Mick, what does Governor Kemp have cooking? What was Donald Trump suggesting?
I think you hit the nail on the head, Joe. By the way, it's good to see you. I think he's reverting to form. I think his conversion may have been short-lived. And in seriousness, what I think is happening is that the campaign, which has been very disciplined in the way they've run for the last 6 months, really has been whipsawed by the events of the last couple of weeks. You know, you're in a tight race. You have this big debate with Biden. You go up and you become a huge favorite to win. Biden drops out. You're expecting the Democrats to at least have some infighting before going into the convention on replacing Biden. They don't do that. And all of a sudden, Kamala Harris gets this huge bump and has this honeymoon that nobody really expected to have happen. And I think against that backdrop, Trump just went back to being Trump, which is just beating up on anybody he doesn't care to like, including Republicans. I don't think it's a very smart move. Again, he stopped taking my advice a long time ago. I just don't know who beating up on Brian Kemp adds to the equation. Real quickly, we had this exact same conversation he and I did in the Oval Office about beating up on John McCain after he had died. I'm like, Mr. President, there is nobody out there who wasn't voting for you, but is now going to vote for you because you beat up on a dead guy they voted for 30 years. That voter doesn't exist. Yeah. And I don't know who the voter exists in Georgia that was against Donald Trump yesterday, but for him today.
Well, look, that's just the name of the game here, I guess, following what we saw before the NABJ last week. Mick, I know you're supporting Donald Trump in this campaign. Are you nervous that he's eliminating chances to add new voters? He's, I guess, speaking to the base, but when you saw him up there with Rachel Scott last week, what went through your head?
No, actually, I put that in an entirely different category. I know maybe I'm contrarian on this one. I was fine with that from a campaign perspective. They were late. The tech didn't work. You know Donald Trump as far as his television acumen. He wants lighting to be right. He wants the lights to be right. He wants to be on time. They told him that he had to be in person and he couldn't do it Zoom, and then let Kamala do it Zoom, and he found that out that day. And then the first question was essentially, when did you stop being a racist? You know, I mean, you can't, it was a horrible question from a really, in a bad environment. And I think he pushed back, and I don't think it cost him any votes. Did it pick up any votes? I don't think so, but I think the simple fact that he showed up is probably a powerful message to the African-American community, especially when Kamala didn't. So, look, I put him in different categories, but I worry a lot more about Georgia than I do about the NABJ thing in Chicago.
Interesting. You know, questioning someone's racial identity in 2024 seems to have been a very coarse perspective for a lot of Americans. You don't see that?
That was, yeah. Those are two different things from the conference, right? There was the pushback against the ABC report, and then the comments about Kamala Harris. Right. All I can tell you about is she black or is she Indian or Southeast Asian, however you want to describe it. My guess is, Joe, and this is a guess, is that Trump didn't make that up out of whole cloth. He heard somebody else, likely in the African American community, raise those issues, and he was passing that on. So, does it help? No, but again, I don't think it hurts that much. Given the few number of undecideds left in this race.
Kamala Harris has to pick a running mate today. Make a big moment for the campaign. Does the Trump camp care? Does it change the dynamic for strategy?
I think they care about the attention that it's going to get. Keep in mind, Kamala may be realizing that you can't always wait to the very last moment, because with the stock market doing what it's doing, with the Middle East perhaps doing something, she may end up being outshone in the news if she doesn't time it really right. I do think the Trump campaign will be worried mostly about Shapiro, because Pennsylvania is such a prize. I got to tell you, Mark Kelly, I like Mark Kelly. He's how do you not like him? He's a great American. But Arizona's not as big a prize as Pennsylvania, and it would create a Senate race in 2 years with a possibly weak incumbent in a tight Senate race there in Arizona. So I still come back. My long shot candidate is still Tim Walz. Tim, I happen to know Tim extraordinarily well. I consider him a good friend. He's just a really nice guy. And that might sell in more than just Minnesota. So while Minnesota's a small state, I ran Catholics for Trump in 2020, and the biggest difficulty I had selling Donald Trump was his personality. And if you send Tim Walz into some of these heavily Catholic areas in Michigan, Wisconsin, Minnesota, Pennsylvania, he might actually help move the needle a little bit. So that's sort of my long shot bet for the vice president for the Democrats.
Yeah, I do think it's interesting. There's the question of whether geography works the same way with a running mate in this cycle, in this media landscape, and maybe somebody like Tim Walz, who, by the way, I think served 6 terms as a member of Congress, has quite a bit of experience, could help on a sort of managerial level as well as help in the debate here. I guess we'll find out a little bit later on today or tomorrow morning. It's a video, Mick. You do it all by video now, huh?
Come on, what happened to live television, Joe? What happened to live radio? Let's do it the real way.
Exactly. Or God forbid, the two walk out on stage together. We do everything by video now. It's a social media world we're in.
It is. Look, I'm more interested in when she starts answering questions. Look, that's going to be a story until it's not, but it's a story right now. She's only, I think, taken one question, and the question was, have you made up your mind on vice president? Her answer was not yet. That's been the extent of our interaction with the press. So once she announces the VP, my guess is she has to start being a real candidate and going out and talking to people as opposed to what you've just described, doing videos and social media. But we'll see.
So that's the next big thing, right? The sit-down interview. Same thing that Joe Biden was doing before he dropped out. You have to prove that you can do that dance. Sit down, do a 45-minute interview with the reporter of your choice.
You do, and it would probably be ABC. My guess is for the Democrats. They'd love to go to MSNBC, but that's cable news, not the real thing. So they'll go to ABC. Just as Joe Biden went straight to George Stephanopoulos right after the debate. That's home. That's safety for them, just like Fox is safety for Republicans. So my guess is she starts there. But we'll have to do all the networks, and maybe even we'll get her on Bloomberg.
Well, we'll be asking, of course. Mick, you know it's Kamala, right? I have to ask you that because people are suggesting that Donald Trump's mispronouncing her name on purpose. Is that a thing?
I'm not. I'm just not that smart, and I'm married to a Pamela, so I'm just. I mean, no disrespect if I'm pronouncing her name improperly. I apologize for that.
I didn't think you did. That's why I brought it up. Mick, it's good to see you. Thank you for coming back to talk to us, and I'll be curious your thoughts on this pick. This is going to be an interesting moment here. Of course, the former acting White House Chief of Staff, Mick Mulvaney. I can only imagine Mick's thoughts on what's happened to the Freedom Caucus right now following Bob Good. That'll be a conversation for another day. As we keep tabs on this market for you with regrets. NASDAQ is down 2.5% right now. The S&P 500 down 2%, 110-point loss as we watch the Russell tumble 2.5% as well. With bond yields, the 2-year right now, 391. The 10-year is at 381. We'll have more on the markets ahead with none other than Barry Riddles on the fastest show in politics on Bloomberg.
Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ deeply in the red right now. S&P down 108 points, lower by 2%. At the worst level of the morning, we had the S&P 500 index trading down 3.6%, down 195 points, narrowing that loss right now. Still down 109, lower by 2%. The Dow down 757, down 1.9%, while NASDAQ is down 413 for the NASDAQ Composite Index, a drop now of 2.5%. The Russell 2000 Index down 2.6%. 10-year yield 3.81%, the 2-year 3.92%. Spot gold down 1.4%, 24.07 the ounce, and West Texas Intermediate crude down 0.2%, 73.40 for a barrel of WTI. Bitcoin particularly hard hit, down 7.2%. Bitcoin now at 54,900. Stocks are tumbling as concerns about a slowdown in the world's largest economy spur speculation that this year's equity rally has gone too far. The selling is continuing in big tech stocks. We've got NVIDIA shares down now by 5%. Apple is down 3.4%. Microsoft down 2.2%. And shares of Intel are extending Friday's decline down another 6%. Tesla down now by 3.2%. So again, recapping, the Dow, the S&P, NASDAQ deeply in the red, S&P down now by 2%. Stay with Bloomberg for the very latest on these fast-moving markets. Balance of power continues now. Back we go to Washington, and once again, your host, here he is, Joe Matthew.
All you can say is, wow, Charlie Pellet, thank you. It's another tough one here as Donald Trump blames the sell-off on politics. And specifically, the idea of Kamala Harris winning the election. On Truth Social, of course there's a massive market downturn. Kamala is even worse than Crooked Joe, he writes. Markets will never accept the radical left lunatic that destroyed San Francisco and California as a whole. Next move, this is the former president of the United States, all caps, the Great Depression of 2024, exclamation point. You can't play games with the markets, he says. Kamala crash. Of course, if you listen to and watch Bloomberg, if you have a terminal in front of you, you know there's a lot more going on here. And in times like these, we seek wisdom from voices of experience. Of course, no more helpful at this time than the great Barry Ritholtz. You know him as the host of Masters in Business here on Bloomberg, but he's also chairman and CEO of Ritholtz Wealth Management. And Barry, really glad that you could join today. Thank you for being with us here in the political morass. I don't mean to pull you into Trump versus Harris, but can you acknowledge that a change in the polls here is not causing a change in the markets?
So let me get to that. But before I zoom in on that, let's start at 30,000 feet. You know, we all tend to engage in this narrative fallacy that when there's a major dislocation in the market, we go running around looking for what caused this. And so far this morning, I've read, well, it was Buffett selling Apple. Wait, no, it was the craziness in Japan, the worst market sell-off since 87. Oh, wait, maybe it's not that. Maybe it's the unwind of the Trump trade. Oh, wait, maybe it's the Somme rule and we have a recession. And it's never, never just one thing. It's always a panoply of different factors that come together. Hey, I rarely am on the same side of the trade as Donald Trump, but you could make a feasible argument that part of the rally was an anticipation of, wait, we're going to get another $1 trillion tax cut? Wait, he's going to lower. We already took the corporate tax rate from 35 to 30 to 21. Is he really going to go to 15%? Arguably, when it was Trump versus Biden and it looked like a landslide, some of the rally you can certainly attribute to, hey, free money, 15%, you know, whether it's free money on the monetary side or free money on the fiscal side, and tax cuts are certainly fiscal stimulus. Sure, some of that could be that, but it's never just that. If I wanted to pick a single factor, and I hate picking a single factor, but to me, it's the fact that the Fed is a year behind the curve, and I've been jumping up and down and screaming this for 12 months. And, you know, the only thing worse than being wrong is being right. Of all the many things that are out there, and it's never just one, it looks like, oh, that long and variable lag that the Fed has been talking about, well, it wasn't quite as long and it was a little less variable than I think we were expecting.
I was just struck by the speed with which this whole narrative has turned, Barry. Do you think we get an intermeeting cut, and would that turn the market around if investors got the sense that the Fed cared more than they do now?
Hemingway comes to mind, gradually, then suddenly. The narrative with the Fed went from, well, maybe we'll see something in September. All right, we're looking like a quarter point in September. Hey, wait, it's a half a point in September. No, it's Jackson Hole in August.
Right.
People, especially Fed chairmen, are loath to admit error. And what Jerome Powell would have to say is, hey, this economy is a little more difficult to read and a little more mysterious in our post-pandemic era. And maybe I should have been cutting in May or June or July, just as a little bit of, like all stock traders overstay their welcome in a bubble. I think the Fed believed their own press releases and their own PR and said, we got this, we got a soft landing, despite lots and lots of accumulated data that, hey, this is starting to build up. When it finally snaps, it's that gradually, then all at once, the pressures build, the tectonic plates move back and forth, and the friction holds it in place for as long as it can, and then boom, you have an earthquake. And that's pretty much what's going on right here.
Or is Jay Powell sitting back right now, cracking that beer saying, you know what, I finally got them to capitulate? Sure, go start lining up the cuts, but this was the hard part.
There's something to be said for that. Although, generally speaking, Fed chair, generally, but Powell in particular, they don't like these sudden spikes. When the VIX goes from 17 to 33, when it doubles overnight, they're not happy about that. That's very disruptive. The whole concept of a soft landing is, hey, the engine's cut out, but we're going to bring the plane in without any injury and put it right down. When suddenly a wing falls off, hey, it gets everybody's attention. I think it would take a lot for them to do that August Jackson Hole cut. But a couple of more days like this, it reminds me of that week in October 08, when Congress refused to do anything about the financial crisis. On Monday, they were like, no, the markets will figure it out. And then 15% later, that Friday, they're like, here's $1 trillion. What else do you need? So if this stabilizes over here, we're probably looking at September. If this gets appreciably worse, then maybe, we're back on in August. You never can tell. It really depends on I love Soros's concept of reflexivity. How do each of these little waves, when you throw the pebble in the lake, how do each of these little ripples affect all the other? They kind of combine in unexpected ways, and that's how you end up with a day like today, where it wasn't any one thing, but just the confluence of all these things.
Mm-hmm. Spending time with Barry Riddle here in the teeth of the sell-off. I wonder your view on the markets, more specifically here, Barry, and the technical levels that you're watching when it's going to be irresistible, right? We're going to have people jumping back into this AI trade at some point, or trying to game the system, trying to figure out where copper bottoms, but we're also going into a seasonally difficult period. So what does the second half look like to you?
Anytime we have a plus 14%, which is a good year in the first two quarters, the temptation is to tap out and take the rest of the year off.
Sure.
And while the fascinating thing about this moment in time and where we are is, on the one hand, we can clearly see signs of stress building up. Bottom half of the consumer strata is, the lower 50% of spenders are certainly feeling stress from higher rates, from increased credit card debt. People who want to buy residential real estate is still dealing with the shortfall of inventory, and that's kept prices very high. We're watching the slow motion train wreck of commercial real estate, which is going to unfold over not days or months, but years and decades because of those 10 and 20-year leases. And so that's the downside. And yet, up until this past month, hiring has been robust. There have been wage gains. There's been consumer spending. Like, generally speaking, the economy has been pretty robust and kind of suggests that, hey, you know, this could be a little bit of a headache, but this isn't what is going to send us into a recession. So really, where we are is, if nothing untoward happens, this economy can keep growing. What are we going to see? A plus 13% corporate profits over the next 4 quarters? That's really substantial, assuming things don't take a down leg. And I hate the on the one hand, on the other hand, but we're really in that middle zone where what the Fed does, how the psychology unwinds. Where I mentioned some of this could be the unwind of a Trump trade, could be an unwind of 15% corporate tax rate. On the other hand, you know, when you want to have a forward-looking political economy, Torsten Slok of Apollo just put something out today about the U.S. industrial renaissance. We've seen a giant uptick in that. So I'm kind of on the fence. We're not in a recession yet, but the warning signs are there that if we don't do something smart, we could be in a recession in 3 to 9 months from now.
Just answered my last question for me, too. I'm really glad you could join us today, Barry. I know we're talking about pretty tough stuff here, but somehow I always feel better after I talk to Barry Riddles. Find his podcast, Masters in Business, which you can hear on Bloomberg Radio on the weekends, too. It's one of my favorites. Chairman CIO Riddles Wealth Management. Barry, thank you so much for keeping a level head, or at least helping us do that. Let's bring you up to date on world and national news ahead of our panel. Rick and Jeannie are with us, but first, Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. Debbie is bringing heavy rains to a wide portion of northern Florida after making landfall early today as a Category 1 hurricane. It's now a tropical storm. Florida Governor Ron DeSantis is warning residents flooding is the biggest worry.
There's going to be a lot of water that's going to be dumped throughout the state, and we're going to see effects of that not just today, but in the ensuing days.
Again, Florida Governor Ron DeSantis, the storm is expected to move over northern Florida, then stall over the coastal regions of Georgia and South Carolina, with potential rains up to 30 inches. Iran has signaled it wants to avoid all-out war with Israel, even as it threatened to retaliate for last week's assassination of a leading Hamas figure in its capital. Tehran, which has already vowed revenge for the killing of Ismail Haniyeh, says it wants to deter Israel from repeating similar moves. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. Just getting word from Charles Schwab that technical issue involving trading at the open has now been resolved. Stocks continue to sell off. We are off session lows, but still steep losses for the Dow, the S&P, NASDAQ 100 index, and the Russell 2000. Right to the numbers here with the S&P down 120 points, lower now by 2.3%. At the worst level of the selling, we did have the S&P down by 3.6%. Stocks around the world are swept up in a risk sell-off. We've got the Dow lower by 813 points, a decline of 2%. NASDAQ down now by 445 for the NASDAQ Composite Index, a drop of 2.6%. The NASDAQ 100 Index down 2.2%, and the Russell 2000 Index of small-cap shares down now by just about 2.6%. 10-year yield 3.80% with a 2-year 3.91%. Gold down $38 the ounce to $24.04, down 1.6%. West Texas Intermediate crude down 0.4%, 73.26 a barrel. Bitcoin particularly hard hit. We have got Bitcoin down now by 7.5%. Bitcoin at 54,717. We'll have a lot more on the market sell-off coming up in just a moment with our Abigail Doolittle. What is behind the selling today? As we heard from Barry Ritholtz, lots of plausible reasons. This morning we put that question to Stuart Kaiser, head of U.S. equity trading at Citigroup Global Markets.
You sort of had this massive data that suggested a relatively rapid loosening in the labor market. And our view has been you run long U.S. equity risk until that U.S. labor market comes under pressure. So that was the pressure point of the market in our view, and it has triggered a broader base selling. Whether it's all inflation, all recession fear is hard to tell, but that's been a key component of it.
Stuart Kaiser of Citigroup Global Markets. Big tech, particularly hard hit. Case in point, NVIDIA down 5%, Apple down 4%, Microsoft lower now by 2.5%. Tesla is tumbling by 3.1%. Oil is extending losses to new 7-month lows as part of the broader sell-off. Again, we have got West Texas Intermediate crude oil trading lower now. WTI down by 0.4%, 73.25 a barrel. Among oil names, ExxonMobil down 1.6%, Chevron down 2.5%, ADRs of BP down by 2.8%. And that's a Bloomberg Business Flash.
Charlie Pellet, fantastic roundup on the markets. I'm Joe Matthew in Washington. Thanks for being with us on the fastest show in politics. This is Balance of Power, the Monday edition. Where will we be by Friday? Don't answer that as we try to get our arms around what's happening right now. It's a pleasure to bring in Abigail Doolittle, Bloomberg Markets correspondent. Before we assemble our panel, Rick and Jeannie are standing by. They're going to have a take on this too. We want to have a chance just to look under the hood here, and it's good to have you back, Abigail. I was starting to get some optimism here. The S&P 500 had trimmed losses below 2%. Yields on the 2s and 10s turning higher. Have we seen the worst of this today?
Maybe on the day, Joe, we've seen the worst, but I don't think that we've seen the worst of this sell-off. And that doesn't mean that we couldn't have a rebound rally for a few days off of today into next week, even a couple of weeks. But overall, there's still a lot of uncertainty baked into these markets. And we've talked about this before, the idea of too far, too fast for big tech. Ahead of NVIDIA, right now NVIDIA really breaking down, crumbling, down 36% from its recent peak. Into that peak on the year, up more than 180%. We've all heard about the AI craze. So that's really the poster boy for it. So long as you have people selling high quality stocks like this out of fear that there is just again, that people got too greedy, really the animal spirits were stirred. Something else going on that we talked about a couple of weeks ago was the carry trade in the yen. The yen had started to strengthen a couple of weeks ago. Now it has strengthened in a big way. It looks like it's going to perhaps take a pause in that strengthening. But what that does is it means that the cheap yen that had been carrying the risk on trade for, say, that Nikkei, which crashed more than 12% in the Asian session, the worst day since 1987. Imagine waking up to that, not a great headline. And then as you were mentioning, and Charlie was talking about these big losses earlier, that's a big piece of it because there just isn't as much cheap money around. So long as that continues to be the case, especially going into the expectation that the Fed's going to cut, it just doesn't make a lot of sense. Investors nervous, too far, too fast. And I would also offer that there is a political side of this. Some of today's selling does have to do with the tightening of the race between Kamala Harris and Donald Trump, with Harris now in the lead through PredictIt. And then you throw in geopolitics, and it makes sense as to why we're seeing investors a little bit skittish.
Yeah, this is pretty nasty cocktail here. I'm glad you mentioned this idea of the presidential campaign getting in the way. You know, we were trying to get a sense of how real that was with Barry Riddles. Is the Trump trade over then?
I don't think that it's over, but right now it is on pause. The last time I took a look at DJT, which is really an easy way to see the Trump trade, of course, Trump Media and Entertainment, it had been down, I think, 7% or so. Big tech, that's associated with the former president and J.D. Vance, who has vowed to go after it. But on the other hand, you have the energy and the more economically old school sectors down as well. I don't think it's over. And then crypto, I think, would be another piece of reason why people are saying that the Trump trade's over. I think it's on pause. I think what we have here is what we had before once Kamala Harris entered the race. Uncertainty. Before, the spread was so wide between Joe Biden and Donald Trump that it seemed very likely that we knew who was going into the White House. Right now, we do not. And then you throw in the geopolitical picture. You have no idea how either Kamala Harris or Donald Trump will really respond to that situation. I think it gives investors a lot of pause to think about into November. In addition, August tend to be tricky months. 2011, the U.S. credit rating was downgraded. So I'm sort of reminded of that we have some of these DC vibrations now. I absolutely think that it's a piece of today. People will look past it because it's the big tech selling off. But if you take a look at that VIX, which we, came alive around Donald Trump and Kamala Harris and Joe Biden a few weeks ago, earlier today was as high as 60. That's the highest it's been since 2020. So yes, I think that election 2024 and the uncertainty there is certainly a piece of today's selling action.
Just think of where we'll be by October. Abigail, I'm really glad you could join today, and I appreciate all the time that you put into this. Abigail Doolittle, connecting the dots between the markets and politics here in a really special way on balance of power. And this is something that's going to continue to evolve. This is going to be part of the story between now and November as we assemble our panel. Jeannie Shanzano and Rick Davis also have their eyes on all of this. Jeannie, of course, Bloomberg Politics contributor, political science professor, Iona University, and Rick Davis, partner at Stone Court Capital, Bloomberg Politics contributor. As I point you back to the Truth Social from Donald Trump, I don't know what either of you guys think about this, but Trump says this is all about Kamala Harris. Of course, I think we've established this hour. It's about 10 other things as well, but you can't overlook this. Donald Trump is predicting the Great Depression of 2024 in this post. He says you can't play games with the markets. Kamala crash. Jeannie, this is not good timing for the vice president.
It is not. And of course, Joe, I'm sad because there's so much good news for Kamala Harris and the Democrats. And of course, we have to start here. So you're absolutely right. The YouGov CBS poll has so much positive in terms of momentum for the Harris campaign. But the big difficulty there remains the economy. I mean, people don't necessarily express a lot of enthusiasm about Donald Trump, but they still believe that they will be better off economically if he is in the White House than Kamala Harris. So that remains a difficulty for them. And of course, the timing of all this does not help. She is, just hours away from announcing her VP pick. They don't want that to be overshadowed by news of, tremendous downturns on Wall Street.
Yeah, look, I guess they've got to get this done, Rick, in time for an event tomorrow. But you wonder if maybe they slow the roll on the VP announcement, or maybe she needs a running mate to help knock back some of this criticism because people are watching the markets tumble. Donald Trump is blaming Kamala Harris, and we just had Abigail Doolittle and Barry Riddle suggest that the undoing of the Trump trade is actually a part of this. You can't remove, it seems, Rick, the market from politics.
No, I think the market's been embedded in politics since there was a market and since there was politics. So I don't think this is anything surprising. I remember the days in 2008 during the September and October campaign for president. We would have every single speech covered by a ticker in the corner saying, oh, look at how bad the market's doing today. Running a campaign for basically the incumbent party was no fun doing that. And so I think one day the Harris campaign can survive, but if this continues on through the fall, that's more of a plausible problem. Right now, I think they're focused on rolling out the VP. Nothing's going to get in the way of that. Frankly, that'll generate enough political press for them that they can blow through a market correction week. But as I said, if the week turns into months and the months turns into a quarter, it's going to be a long fall campaign.
Could be a long fall campaign. With that in mind, Jeannie, we do have an announcement that appears imminent. She's going to be going on the road, Kamala Harris, the vice president, with the running mate starting tomorrow. So we've got a pretty short window here. People seem to think it's tonight or tomorrow. There's going to be a video that drops with now, according to Reuters, I haven't had a chance to mention this with all of our stock market talk, one of two. Reuters says it's down to two: Governor Walz, Governor Shapiro. Which direction do you go in? I'm guessing you're going to say Pennsylvania, Jeannie.
You know, it is such a tough choice because they both bring so much to the ticket. I mean, it is an embarrassment of riches for them, the Democrats and the Harris campaign. That said, I would probably be on the more conservative area in this and say go with Shapiro for a few reasons, but the main one being the state that he could bring. You know, there was a long time when the Trump campaign was saying that the easiest path for them, well over, they thought, but at least to 270, was through Georgia and Pennsylvania. You've got Trump down there attacking a very popular Georgia governor over the weekend. And if she indeed does go Shapiro, that makes both of these states a lot more risky and a lot less certain for the Republicans than they might have felt when Biden was at the top of the ticket. So with my money, I would go for Shapiro, but love Walz. You can't go wrong with Walz. He brings so much to the ticket if she goes in that direction.
Well, enter the Obama advantage. This is fascinating to read about in the New York Times today, Rick Davis. It goes back to 2007. You know a bit about that race, when a state rep in Pennsylvania by the name of Josh Shapiro broke with the establishment and endorsed the first-term senator named Barack Obama. Of course, Barack Obama lost that primary to Hillary Clinton. He did not forget the outreach, though, and I guess they became very close in what the New York Times describes as a connection that is closer than is commonly understood. David Plouffe is helping to run this thing now. Obama's fingerprints are all over the campaign. Doesn't that seem like a deal closer, Rick?
It's certainly influential. I think the deal closer is really the, sort of chemistry that he has or doesn't have, with the vice president. They, sort of cut bait time was this weekend where the various candidates for vice president, lined up and spent time with the VP. And, a lot of it is who I'm comfortable with, who's going to help me win. Yep. And, can they help me govern? And who do I want around every day? And I have no doubt that all these candidates have, good charisma, good chemistry. But you're right. You go back that far in time and you look at the track record that Shapiro has of taking risks, sticking his neck out, pushing the party in a direction that is away from the old, horses. I think that he's got a lot going for him in that regard, especially with Kamala Harris, who's trying to do the same thing in real time.
Fascinating stuff here. Jeannie, do you think this rolls out tonight or we get the video drop tomorrow morning?
Oh, that's a tough one. I think she should let it ride as long as she can. So I would say, tomorrow, if I was guessing, but maybe they're going to spread it out and drop and then, sort of do that rollout. Sure. But, Josh Shapiro has been accused of even trying to talk like Barack Obama in his speeches all over social media. And after this weekend, I'm going to say that Josh Shapiro is the only thing that Barack Obama and Donald Trump helped create together. So that's what I will say.
I like where you're going there. Yes, I remember a certain endorsement that helped Shapiro become Governor Shapiro that could, in fact, haunt Donald Trump, depending on how this goes. The smart analysis there from Jeannie Shanzano and, of course, from Rick Davis. I didn't even get to ask you guys about the bear cub, but we do have a second hour. I'm Joe Matthew in Washington. Thanks for being with us on the Monday edition of Balance of Power. Yes, you can consider that a warning. RFK Jr. just continuing to make news as the campaign vanishes. We have a lot coming up next hour to talk about. We've got a beat on the markets for you here. We'll keep tabs on the stock market with the help of Charlie Pellet and Abigail Doolittle. We'll talk with political scientist Laura Brown about this campaign, and Christopher Smart is going to join as well. on a very interesting moment for geopolitics meeting the markets, which right now remain lower. We have seen worse numbers today, but not by a lot. The S&P 500 down 140 points. That is more than 2.5% as we get back to our lows of the day. Stay with us. Kaylee joins the conversation coming up next. Hour 2 of Balance of Power ahead, only on Bloomberg.
politics to the world of business. This is Balance of Power. Live from Washington, D.C.
Donald Trump blames the market rout on Kamala Harris. Welcome to the fastest show in politics as we follow prices lower on Wall Street and wait for an announcement on a running mate. I'm Joe Matthew alongside Kaylee Lines in Washington, D.C. It's only Monday, Kaylee, and we've got a lot to talk about here. Reports say that Kamala Harris has the Veep stakes down to 2.
Yeah, the governor of Pennsylvania, Josh Shapiro, and the governor of Minnesota, Governor Walz. This is according to Reuters. We haven't yet confirmed this ourselves here at Bloomberg. What we know is that is getting tighter. What we also know is that the market's not doing very well today. You alluded to it, Joe. Donald Trump is calling today the Kamala crash, although it is worth noting we aren't crashing quite as hard as we were when the bell rang at 9:30 a.m. Eastern this morning.
Although we do seem to be reaching our way back toward the bottom here again with the S&P 500 back down more than 2.5%. Bond yields have been a little wobbly. Looks like they're turning lower again now. Kaylee, is to your point, Donald Trump points to not only Kamala, but predicts the Great Depression of 2024. We talked earlier with Barry Riddles about the unwinding of the Trump trade. He said that would be one of many factors weighing on the markets today.
Yeah, other factors possibly including the weaker economic data that we've received in recent days, and of course the softer jobs report we got on Friday. So there might be many factors involved here. We'll talk about how politics is involved in this as well this hour. But of course, let's get a check on what the real-time action is right now. Charlie Pellet has a check for us up in New York.
Thank you very much indeed. We are making a run for the lows of the day right now, Kelly. We have got the Dow, the S&P, NASDAQ deeply in the red. Let's get the numbers up here with the Dow trading lower by 907 points, a decline right now of 2.2%. The S&P 500 index now at 5205, down 141 points, a drop there of 2.6%. Keep in mind that in the middle of July, we had the S&P trading at a record 5667. Again, to put that in context, 5204 this back to work Monday, down now by 2.6%. We've got NASDAQ down 3.1%, the NASDAQ 100 index down 2.7%, and the Russell 2000 index of small cap shares down now by 3.2%. 10-year 3.79%, the 2-year 3.90%. Gold is down $39 the ounce, a drop there of 1.6%, 24.03, and West Texas Intermediate crude oil down 0.8% now, 72.89 a barrel. Cannot ignore Bitcoin, a big move to the downside, getting worse, down now by 8.5%. Bitcoin now at 54,185. Retail brokerages Charles Schwab and Fidelity did report outages in the early going amid this global stock market sell-off, but both say their issues have been resolved. So again, the Dow, the S&P, NASDAQ, all declining among some specific tech names. We've got NVIDIA down 6.5%, Apple now down by 4.4%, Microsoft down 2.9%, Tesla down 3.8%. Cannot ignore Intel today. The selling there continues following the 26% drop-off that we saw Friday. Intel down again today by 5.9%. Again, recapping, the Dow, the S&P, NASDAQ, all in the red, with the S&P down now by 2.7%. Balance of power continues now. Lots going on. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
A lot going on with a lot of red on the screen in equity markets. Bloomberg's Charlie Pellet, thank you so much. And we want to talk more about what exactly is happening in financial markets as we kick off the trading week here, and turn to Jess Menton, who is our senior equities reporter here at Bloomberg. So Jess, at first it looked like perhaps the mother of all buying of dips was coming in as we saw stocks rocketing off of session lows. Now it looks like we're heading back down south. So what exactly is going on?
Well, obviously, we're coming off the back of what happened with the sell-off on Thursday, Friday, and then spilling into today as well. So there's a number of different factors, too, and I always like to watch very closely what the flows are telling us as well. So even if you think back to July 11th when we had the last CPI report, there's been, obviously, we've talked so much about the rotation to small caps, but those income sort of proxy-like driven type sectors, if you think about real estate and utilities, those are the ones that saw the most amount of money last week. Tech still got a little bit there, but most of that under pressure, communication services. So you're continuing to see that rotation, even though obviously all 11 industry groups in the S&P 500 is lower right now. But if you want to look at, say, the cost of hedging for a potential client in SPY, obviously the ETF that tracks the S&P 500, that just cost about 2 times more than those that would profit from it. So that's something interesting too, because we're still seeing volatility spike clearly with the VIX at the highest it's been in about 2 years. But when you're still looking ahead as far as hedging demand for a further decline as the S&P 500 obviously teetering on the brink of a correction here, that's actually telling you a little bit of a different story. And then you also have technical indicators like RSI hovering around 30 for both the S&P 500 and the NASDAQ 100. Usually that tends to point toward a short-term bounce here. So it'll be interesting to see how this plays out the next couple of days.
I'm just wondering, Jess, how long traders can resist the opportunity here if prices keep sinking. You know, we see AMD turn positive, for instance. CrowdStrike might be its own story, but there is a little bit of bottom feeding going on. Are there any areas of strength?
That's right, because right now you're seeing it more geared toward consumer packaged good companies and more defensive kind of oriented type companies that are sort of the ones, if you want to look at where the green is headed today, as well as some healthcare companies too that can be viewed as kind of almost staples like and defensive too. But when you do come to levels like this, especially technically with the S&P 500, it actually had broken below its 100-day moving average around, obviously right around 5,300 is where that is. So it's still below that, but usually when you do see a move like that, and then the 200-day moving average is around 5,000, you could see people come back in and buy those opportunities, especially because we've talked about this a lot, in the seasonally weakest time period of the year in August and September, and then obviously lower volume, and then you're going to have spikes like this with the volatility.
Yeah, looking at a 34 handle on the VIX right now, we're talking about the highest level since the pandemic era. Jess, is there any reason to believe that this kind of volatility can be easily tamped down now that we have seen it spike in this way?
Well, if you look at the types of moves we've seen so far this year, whether the S&P was swinging more than 1% or down than 1%, it was only close to about 30 sessions so far this year. Just to give you perspective, because I wrote a couple weeks ago how there was that streak of how long the S&P 500 went without a 2% down day, and it had gone actually over 300 trading sessions with that. So even though we're seeing a spike in volatility, it was very muted moves here for the most part for over a year, even though obviously I think sometimes people forget about the volatility we saw last October when the S&P 500 made a low. So yeah, we are seeing a spike in volatility, but it had been pretty tame for a while.
Really incredible to see that the VIX was up to 65 this morning. Jess Menton, thank you so much for being with us on the markets, live from World Headquarters in New York. I'm Joe Matthew alongside Kaylee Lyons in Washington here on the Monday edition of Balance of Power as we wait for not only this market to close, but potentially an announcement on a running mate later today into tomorrow. Kaylee, of course, it comes after a weekend that we saw Donald Trump on the campaign trail in Atlanta, and he's blaming Kamala Harris for this stock drop today. You pointed this out to us when you put it on Truth Social. You can't play games with markets. Kamala crash, he's calling it.
Yeah, and I'm seeing a lot of Kamala crash circling in certain circles on
is that
X
trending now?
Today.
Not
at least trying to make it so. But there is the point of consideration here. I've seen it show up in a number of strategist notes as well that noted that there was a relationship between the way we saw the S&P 500 performing and the odds of a Trump victory in November. And how much could we attribute what we're seeing today to the fact that there's at least been a recalibration in the race now that Kamala Harris is the Democratic nominee.
They were talking about a Harris trade last week with solar stocks and some other things moving. I don't know if that's real either, but Christopher Smart has thoughts on this. I'm glad to say he's back with us, the managing partner at Arbroath Group, former special assistant to the president for international economics during the Obama administration. Christopher, it's good to see you, and thanks for joining here. How do you see that idea, the unwind of the Trump trade, and maybe more broadly, as Barry Riddles was mentioning earlier, disappointment over the idea that corporate taxes may not be cut here in a Kamala Harris campaign turned presidency? Is that part of this picture on Wall Street?
I think if it's part of the picture, it's a very small part of this picture. If it would be the first time in a long time, maybe ever, that for all of my respect for the Vice President of the United States, that any Vice President of the United States has had any impact on the equity market. I think it's also the suddenness of this sell-off really tells you more, I think, about the market itself, the sentiment, the positioning, than any one piece of data. I mean, I think those of us who are trying to piece together what has happened over the last few days, you start adding up small things like the unemployment report, Warren Buffett selling down his equity stake, the yen trade, the carry trade out of Japan, unwinding, all of those things kind of add up to this, people looking at their portfolios and saying, gosh, I'm overweight these very risky stocks, the valuations aren't so great, and everybody starts to run for safety. So I think it's more a combination of equity market factors than anything even in the macro data, let alone the politics.
Well, if we zero in on the data, though, if you look at the weak data we got in terms of ISM manufacturing, then, of course, the softer jobs report we got Friday, does anything within that, Christopher, suggest to you that regardless of whether or not the Fed decides to move intermeeting, as some in the market are betting on today, or perhaps move in September in the expected 25 basis point amount, that the Fed already will have gone too late, that something will have already broken by the time we get to that meeting?
Well, you've seen it in all the commentary in the last 48 hours.
Certainly.
I think it's a lot of overreaction to a Fed that has been very, very methodical about its approach, has been fairly transparent about it. I think the calls for an inter-meeting cut right now would freak out the market even more than it is right now. And I think we'll probably see, maybe if the data continues to come in weak, particularly on the employment side between now and the end of August, we might see 50 instead of 25 in September. But I'm not sure you're going to see the Fed reacting to this market dynamic right now. And as you were just saying a few minutes ago, we're more likely than not to see some people start coming in on the buy side now that, you can buy NVIDIA at a much at a welcome discount to what you were buying it for a few weeks ago.
Fair enough. Could get better, I guess, too, as we go. Christopher, I'm compelled by this whole narrative that Jay Powell has screwed up again. He was late to start, and he's going to be late to finish, when he might be sitting back smirking right now thinking that this was the point, that he wanted the market to capitulate, and he can now move forward with cutting.
It's the poor guy. He's either a dope or an evil mastermind, or a good mastermind.
Right.
More like, the truth of the matter is he's a really bright guy who's trying to make sense of some very complicated data at a very tricky time in our nation's history, right before a very polarized election. I think the one thing we do know about him and the rest of the members of the FOMC is they're not going to jump and react to a few days of trading in the equity market. I think they will pay extra attention to the labor data that's coming in, because that's what the market is signaling. I mean, are we wrong about the soft landing? Is there more weakness there than we think? Is that unemployment uptick because more people are coming out looking for work, or is it because the hiring is cooling down? The data still seems to show that balance sheets are strong, consumer demand is still good, earnings are weaker, but they were supposed to be weaker. Remember, they were cooling down the economy. That's what he was trying to do. So I guess, Joe, to your point, it does feel to me like he's more likely sitting back and saying, this is what I was hoping would happen, rather than, panicking.
Well, as you allude to the question of whether or not the soft landing ultimately is going to be realized, we did see Goldman Sachs and Jan Hatzius over there raising their recession odds in the next year to a still, I guess you could say, relatively low 25%. So we're talking 1.25% chance here. That's up from 15%. Right. Where would you put the odds right now, Christopher?
I'm sorry. Stop the presses. We've gone from 15 to 25%. And Jan,
they're still higher.
Jan is an extraordinarily talented economist and market strategist, so I'm pulling his leg a little bit here. But yes, of course they're higher. They're supposed to be higher. The economy was supposed to be slowing down. The unemployment rate is supposed to be ticking up. The prices, as you recall, which is what we were all focused on over the last year, are coming down, and that's the good news. Again, I go back to the market reaction that is causing so much uncertainty right now. And I think we all have to come back and re-examine our fundamental approach and our assumptions here. What did we get wrong? What is it we're missing? But the market dynamic here, again, I think tells you much more about the way people are positioned, the way that risk on trade has, people have sort of gotten way out, if I can use an unseasonal metaphor, way out over their skis. And a few worrying data points have sort of triggered this rush to safety. So I think I would expect things not to bounce back suddenly from here. We might get a few more weeks, days of choppy markets, but I don't think it's my base case or many people's base case that we're now suddenly heading into a recession next year. But we'll be watching the data later this week. There's ISM data. There's another jobs. The weekly jobs report, and that'll have a lot to do with that'll say a lot about where this market is headed in the near term.
Really interesting. So you talk to Christopher Smart for 5 or 10 minutes, you start wondering if maybe it's time to start buying. Maybe this is irrational. Christopher, what would this market look like with a rate cut under its belt? Go ahead and correct me if you want.
Well, I don't want to say you should buy today. I'm just saying things are much more attractive, and you shouldn't be selling today, probably is what I would say. I think, again, we're sort of looking at, maybe 3, maybe 4 25 basis point cuts between September and January 1st. You start looking into next year, and as long as the hiring data, the corporate balance sheets remain strong, credit markets still look relatively healthy, and you don't see any kind of, we're all sort of on the lookout still for those hidden accidents. Is it another regional bank? Is it an emerging market? Is it some part of the financial system that we can't see that is suddenly going to break under the stress of high interest rates? Those are all things everybody needs to keep an eye out for. But at least right now, I think it's hard to make the case that the data is saying we are headed for a recession. So I guess, my very tentative advice would be, this is not a time to sell, and over the next few months, you'll be wanting to look to add.
Christopher, finally, we've spent a lot of time talking about the equity market today. It is worth noting in the bond market, however briefly, we did see a disinversion of the 2-10s curve. Is that a real signal to you?
It's a signal. It's worth looking at. I think it's got to be uninverted it's got to be steepening over a period of time to really pay more attention to it. But I think it's certainly something we need to watch. The dynamics of the 2s and the 10s are very different in terms of flows, different auctions. So I think it's something we need to watch over the longer term, but it's not something on a single day that's going to make a difference.
Fair enough. We're inverted by about 11 basis points as we speak. Christopher, great to have you on this Monday of Mondays. Christopher Smart, of course, formerly of the Obama administration, now at Arbroath Group, and where he is a managing partner. It has been quite a day in markets, Joe. Of course, it's not as horrible as it seemed when the opening bell rang at 9:30. If you're long equities, we are well off the lows, but right now we're still down about 2.5% on both the S&P 500 and the tech-heavy NASDAQ 100.
Yeah, closer to 3% on the NASDAQ, 480 points. We are reaching back down there, but if you care about the Dow, we were looking at a more than 1,100-point loss at one time this morning. We've seen some pretty staggering numbers here. You mentioned the bond market, Kaylee. Crude oil is also worth watching as well, coming off its lows. We're back above $73 here, and that whole small cap trade continues to deteriorate with the IWM, the Russell 2000 index. It's down 3% today, getting closer back to that 200 level, Kaylee, almost like it never happened.
And I'm glad you brought up oil as well, because something we didn't talk about much in the last 15 minutes is this notion that geopolitical risk may be playing a role here, as we're still awaiting to see what form the retaliation from Iran toward Israel may take as the U.S. and other allies are bracing for that event.
No fast moves, apparently, on this one. Anthony Blinken reportedly telling his G7 counterparts that a retaliation would be expected as soon as today. We'll have more on that. In fact, we'll assemble our panel next. This is Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. Stocks selling off big time. We have got concerns about a slowdown in the U.S. economy. That is spurring warnings that this year's torrid stock rally has gone too far. All part of a global sell-off right to the numbers, with the S&P down 130 now, down 2.4%. Dow Industrials down 890, a drop there of 2.2%, while the NASDAQ Composite Index now down 456, a drop there of 2.7%. The Russell 2000 down 3.1%. The VIX now at 32, 10-year yield 3.79%, the 2-year 3.90%. Spot gold down $38 the ounce to $24.05 for gold, a drop now of 1.6%. West Texas Intermediate crude down 0.9%, $72.90 for a barrel of WTI. Crypto hit hard. Bitcoin down 7.6%, $54.63 for Bitcoin. NVIDIA shares are plunging today, down 5.4%, following a report that the company's upcoming AI chips will be delayed due to design flaws. Again, NVIDIA down 5.5%, all part of a broader tech sell-off. Apple down 3.7%, Microsoft down 2.5%, Tesla down 3.4%, and Intel extending Friday's losses. Intel down by another 5.9%. So again, recapping here, a sell-off underway with the Dow, the S&P, NASDAQ deeply in the red, S&P down 2.4%. Keep it locked in to Bloomberg Television and Radio for the very latest on these markets. Balance of Power continues now. Once again, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, great job today keeping us in touch with the markets, and it's not been a fun one for Charlie in New York as we bring you live coverage from Washington here, standing by for an announcement from the Kamala Harris campaign on a running mate. Reuters reporting earlier in the hour here that it's down to two. It's either Governors Walz or Shapiro. We'll find out as soon as tonight, or more likely, according to some, early tomorrow morning when a video announcement is made. That's exactly the way, Kaylee Lyons, Joe Biden rolled out his selection of Kamala Harris, which looked a lot like the Obama endorsement. He was actually calling her on the phone. You couldn't see her. You just heard her voice saying she's ready to get to work. So we might get something like that.
Yeah, of course, that was in the 2020 cycle when we were in the middle of a pandemic, and it was a very different campaign. Meantime, here in 2024, after she makes this announcement, she is expected to appear alongside this person at a massive rally in Philadelphia. I've seen reports today, Joe, that they're expecting more than 10,000 people to be there tomorrow.
Yeah, they've got big travel plans. Going to be a different city over the course of the week. And J.D. Vance will be following, which is going to be fun to watch. He's got like the Oppo tour here.
Some counter-programming.
Counter-programming each of these events following Kamala Harris around the country. So it's on, as they say.
Yeah, still got to make the pick first, though. So to weigh in with their thoughts on this pick before it is finally made, our signature political panel, Rick Davis and Jeannie Shanzano, are with us, both Bloomberg Politics contributors, of course. So, Rick, assuming that Reuters is correct, and this really is between Governors Walz and Shapiro. Shapiro, on the one hand, may have a problem with some progressives when it comes to his stance on Israel and Gaza, his handling of campus protests, for example, while the governor of Minnesota may be too progressive for some. Who is least likely to alienate voters here, Rick?
Well, I think that you go to the biggest voter pool you've got, right? Everything is a percentage. Is it easier for Josh Shapiro to win Pennsylvania or Walz to win Wisconsin? And what is the relevant amount of electoral votes that go with each? And I think in both those cases, advantage Shapiro. Look, I mean, the reality is the most important meeting that took place on Sunday was with Eric Holder, who was carrying over the briefs to the vice president on the vetting. And what we don't know is what's in the vetted material. And any bad news in that vetting material could have much bigger impact on the candidacies of these men than anything they bring to the table politically.
Do you like this rollout idea, Jeannie? The video hits Tuesday morning, they hit the road, Philadelphia, carry on throughout the week. And if you do like that idea, wouldn't it seem weird to start this in Philadelphia with the governor of Wisconsin?
The weird label does not fit this team, Joe Matthew. That's
okay.
Fit
I used the wrong word.
I'm kidding. I do think it makes sense. We can't say it's an indication that Shapiro has the upper hand and will be the nominee, of course, because as Rick said, we don't know what is in those vetting materials. But I do think, regardless of who she chooses, whether it's Waltz, whether it's Shapiro, both of those governors and then also everybody else who's been on this short list are going to come out strongly and continue to support Kamala Harris. They've all made that clear. So I think it is going to be a good rollout for them. It's designed to show the vigor, quite frankly, to show the differential in energy and age between a Kamala Harris and a Donald Trump. That had always been advantage Trump when Joe Biden was at the top of the ticket. It's now advantage Kamala Harris. She is going to be visiting all of these swing states in a very brief period of time, and that is a far cry from what Donald Trump has done. And I'm listening to Kayleigh talk about that crowd size they're expecting, and Donald Trump is not going to be happy to hear that as this weekend. He doesn't like those kinds of crowds. Kamala Harris, so he's going to be hoping that that's not the case in the tens of thousands.
Yeah, he'd probably like his crowd to be even bigger than that when we see him in Montana later this week. Jeannie, I also want to point out some of the polling that we've gotten over the weekend ahead of this VP pick, including the latest from CBS, which finds the vice president with a 1-point edge nationally, exactly tied with Donald Trump in the battleground states. But something else that caught my attention was that 74% of Black registered voters in this poll say they now will definitely vote. That is up 16 points from the last poll in July when Joe Biden was still in the race. Jeannie, how important is just that notion of higher turnout?
It's very important. It's an indication of enthusiasm. We saw that the increase in terms of people who said they're going to go out and vote amongst likely Black voters up tremendously from where it was under Joe Biden. In terms of support, she isn't quite where Joe Biden was in 2020, but she is definitely moving in the right direction. And I think unless she makes a big mistake with the VP choice, that those numbers will keep moving up as she goes into the Democratic convention and then beyond. So the momentum is certainly on her side, and I think it just underscores how important this choice of a VP is. If she was to make a misstep, something very shocking, somebody who, quite frankly, did what J.D. Vance is doing to a certain extent to Donald Trump, those numbers may stagnate. But provided she makes a strong choice between one of these two, she's going to be in a good position to carry this momentum forward. So she is feeling very good about where she is. She just can't make any mistakes now.
Rick, I want you to bring us inside a campaign that is trying to plan a surprise here, and they're planning it ahead of a 5-day, 7-city tour. So presumably, while reports suggest it's unclear if Kamala Harris has made up her mind, she probably has. And I'm guessing a phone call has been made. It's 1:30 p.m. on the East Coast right now. They would need to know, I'm guessing, 24 hours in advance of their first event together. But of course, you had to stage a super secret transfer of a certain running mate from Alaska to get to the Twin Cities at a convention. To what lengths are they going to right now to keep this quiet?
Yeah, I mean, the biggest problem they've got is leaking. Campaigns aren't known for their tight seals. And so that means, the only way you can really avoid it is having fewer and fewer people around you who actually know what the answer to the question is, who's going to get the baton. And so that creates a lot of frustration. But there are two parallel tracks. There's one of the selection process, and we've talked a little bit about what's been happening there. But the campaign's ramping up. They're going to have an entire team assembled who will take that vice presidential nominee, whoever it is, and start running around the country with them, advanced people, schedulers, speechwriters. There's a speech being written as we speak for the Democratic convention for a speaker who nobody knows who it's going to be yet. And so it's the most bizarre aspect of a presidential campaign, I think, which is this whole initiative around somebody who you don't know yet is being put together, and they just get dropped in at some point tomorrow.
Well, and of course, this doesn't happen in a vacuum either. Certainly, it's happening in the context of those watching and listening here on Bloomberg with the knowledge that there's a pretty brutal sell-off happening in financial markets. And that's something that isn't unique to today. You could look back to last week as well. The economic data, Jeannie, would suggest that things are softening in a more material way. How does this kind of split screen risk playing out for Kamala Harris if she wants this excitement around her VP pick, but on the other hand, sentiment around financial markets and the economy may be souring as we speak?
Absolutely. And you look at the YouGov CBS poll, that is her biggest weakness. People still feel that they would be much better off under Donald Trump in terms of their personal wealth and the economy. And he, of course, is playing off on that. I'm looking at Truth Social right now. He has repeatedly said Kamala crash versus, what is it, Trump cash, I guess it is in my notes. And he has said that over and over. I have to keep notes on these things. He has said that over and over and over again, which I think is an indication as to how strongly the campaign feels, his campaign, and knows that this is an enormous weakness for her. So, you know, do I think it's had a huge impact on her at this moment? No. You just had a great interview with Christopher Smart where he said vice presidents historically don't cause markets to go down. That's true. But if this remains an issue throughout the campaign, it's her big Achilles heel. They've got to get their head around this. And she's got to be able to respond to how she'd do things differently. Otherwise, this will continue to drag her poll numbers down or at least keep her even with Donald Trump.
Of course, it's not just the stock market itself. It's what the stock market is reflecting here. And if that happens to be a recession, we're dealing with a much greater problem potentially for the incumbent party. Jeannie Shanzano, Rick Davis, great conversation, great panel as always. Bloomberg Politics contributors, great wisdom on a Monday here as we try to figure our way forward in this market and on the campaign trail. I'm Joe Matthew alongside Kaylee Lyons. We want to bring you up to date on world and national news before we get any further. And for that, we turn to Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Hey, Joe. Florida Governor Ron DeSantis is warning residents heavy flooding is expected after Hurricane Debbie made landfall early today in northern Florida.
We have been approved for federal disaster assistance. Our pre-landfall declaration was approved. Our National State Guard are ready for search, rescue, and humanitarian assistance as needed.
Again, that's Florida Governor Ron DeSantis. Debbie has now been downgraded to a tropical storm, but it is expected to move over Georgia and South Carolina and then stall, bringing as much as 2 feet of rain to that region this week. White House senior advisor Gene Sperling is leaving the White House to work on Vice President Kamala Harris's campaign. President Biden says it was Sperling that helped him execute the American Rescue Plan during the pandemic, helping families get child tax cut relief as well as emergency housing assistance. Sperling first worked with Harris when she was California Attorney General during his time in the Obama administration. Iran says it wants to avoid an all-out war with Israel, but does want to retaliate for last week's killing of a leading Hamas figure. Israel has neither confirmed nor denied that it was responsible for the deadly attack. President Biden will be meeting with his national security team this afternoon. He spoke earlier today with Jordan's king and discussed the possibility of an immediate ceasefire and hostage deal. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. A global market sell-off. Wall Street being hit hard by fears that the U.S. economy is in the danger zone. Stock bears are warning about U.S. economic growth and potential risks to the market. Here's where we stand. The S&P now at 52.16. Yes, off session lows, but still looking at a loss of 129 points on the S&P, down now by 2.4%. At the worst level of the day, the S&P was down by 195 points. Again, to put it all in context, down 128 right now, a drop of 2.4%. The Dow down 871, decline of 2.2%. The Nasdaq Composite Index lower now by 2.7%. The Nasdaq 100 Index down 2.3%, and the Russell 2000 is tumbling by 2.9%. The 10-year 3.79%, with a 2-year 3.93%. Spot gold down 1.7%, $24.01 the ounce. West Texas Intermediate crude oil slumping by 0.5%, $73.12 for a barrel of WTI. Our Abigail Doolittle will have a lot more on the markets for you coming up in just a moment. Tech stocks being hit hard. Case in point, NVIDIA down now by 5.1%. Apple down 3.7%. Microsoft among mega caps lower by 2.5%, while Tesla is tumbling 2.9%. Brief mention of Intel because its losses are continuing on this Monday. Intel was down 26% on Friday, down another 5.7% today. Again, recapping the Dow, the S&P, Nasdaq all in the red. S&P down now by 2.4%. Balance of power continues. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet helping us make sense of a tough day on the markets. We do thank you, Charlie. Straight through Balance of Power today. Great work as we add the voice of Abigail Doolittle, Bloomberg Markets correspondent, with a look a bit deeper under the hood here at some of the trends we've been talking about, including politics. Abigail was with us last hour talking about the undoing of the Trump trade. And as well, Abigail, we've heard directly from the former president here blaming Kamala Harris for the selling today. And while this may be part of the story, you can help fulfill the whole picture here. He's predicting the Great Depression of 2024. It says, quote, "You can't play games with markets. Kamala crash." Is that what we're going to call this, Abigail?
I would be surprised if we call this the Kamala crash, because even if we did go into the Great Depression right now, I'm not quite sure how we pin it on Kamala Harris, the current vice president. I think that it would more be the overall Biden administration, and it's not clear that we are going into a Great Depression. Now, that said, some of these markets do look very fragile. The Nikkei in particular, down more than 12% in the Asian session, the worst day since 1987. We had the NASDAQ 100 futures at the lows and the pre-market down more than 6%. Currently off of those lows, just the worst day since last Friday, but the S&P 500 is still down a chunky 2.4%, the worst day since December of 2022. But the point I really would like to make around all of this before I do talk a little bit more about that intersection between business and politics, because I do believe that is at play today. I just would not call it the Kamala crash. You know, this is not new. These markets have been selling off essentially since July 9th. We've almost been in this for a month. Sell-offs, corrections, bear markets, there's a saying that they happen very, very slowly and then suddenly. We're in that suddenly phase. It's unlikely that this is it. We're just taking a pause in the day. The fact that there isn't panic right now, when you see a sell-off, a bear market, a crash, boomerang to the upside, that's called a capitulation bottom. We can all probably remember that pretty well in March of 2020 when we had these brutal losses and all of a sudden turning around. We have not seen that yet, so there's probably some more pressure on these risk assets ahead.
Well, when you talk about panic, Abigail, that leads me to the VIX. It's the fear gauge, right? And you've been talking to us about the VIX in the context of this election for weeks now. Obviously, it too is off the highs. At one point, we had a 65 handle. We're now somewhere in the 30s, but this is still the most elevated we've seen going back several years. What does that signal to you?
It is pretty amazing, and absolutely, we were talking about it a few weeks ago because when the former president and the assassination attempt and then the current president, Joe Biden, stepping down, that VIX went from a very sleepy 12 all the a sudden up toward 18, 19, which now seems low. But what I'm trying to say is it came alive. Today, it truly came alive. So much uncertainty out there. Investors are a little bit nervous. This represents hedging against long positions, or it could actually represent people who have outright bearish bets through options. In terms of, election 2024 and today's selling, on the surface, it's all about too far, too fast for big tech. But connected to that is the uncertainty around this election. We've known about this election, well, frankly, since the last election for many, many years now. The idea that you've had stocks up so much, so frothy, so many animal spirits all year long, knowing that there was going to be uncertainty around this election, also knowing that there was growing geopolitical tensions, that really should not have happened. There was not an abundance of caution, and now investors are paying for it as we see investors moving into haven bonds, that VIX going sharply higher, as you mentioned, and then the unwind of the Trump trade in large part. That doesn't necessarily represent that investors aren't behind Donald Trump, or investors aren't behind Donald Trump at this moment, but it does point to the fragility and a pause, and Kamala Harris is leading and predicted. So when you have that close of a race, as you both know much better than me, that is going to lead to this uncertainty. The VIX also measuring that uncertainty and these wild, wild moves for stocks.
Yeah, well, thank you for keeping on top of these wild moves. Bloomberg's Abigail Doolittle, we appreciate it. Of course, talking about how the presidential election may be at play here as well. And there's going to be some important developments in that arena in the next 24 hours, too, as we await, expected by tomorrow, the vice presidential selection of Vice President Kamala Harris. Who will be her running mate? According to Reuters, it has narrowed down to two, the governor of Minnesota and Tim Walz, or the governor of Pennsylvania and Josh Shapiro. And that's where we begin now with Laura Brown. She's a political scientist and also author of Amateur Hour, Presidential Character, and the Question of Leadership. Welcome back to Balance of Power here on Bloomberg TV and radio. Laura, as we consider that it may be down to just two choices, which one makes the most political sense to you?
Well, I would think that Governor Josh Shapiro does, if you're just looking at those two choices, largely because what is important for the vice president to shore up are essentially Republicans who don't feel they have a home within the Republican Party. There are right-leaning independents, and there are Republicans who have decided that they are uncomfortable voting for Trump and supporting a Trump-Vance ticket. And so that is really the play in terms of the voters that Vice President Harris should want to attract, because that will help her the most in the battleground states.
Well, you consider the importance, Laura, of Pennsylvania, and you do wonder why we're spending so much time talking about this. Isn't Josh Shapiro as well, considering the deep relationship that he has with Barack Obama, as outlined in the New York Times earlier today? Isn't this the slam dunk that the campaign's looking for?
Sure. I mean, I think most people have always seen him as a strong favorite. There are other options. Obviously, Governor Andy Beshear in Kentucky would not be a bad choice because he fulfills some of the union's desires, but at the same time has been governing in a very conservative state for years. So I do think there are other options for her, but at the end of the day, it's going to come down to who she is most comfortable with and who she feels can be the most helpful. And that doesn't necessarily mean taking Governor Shapiro out of his state and taking him to other places. It may mean leaving him in his state to help build that coalition there.
Well, certainly on the other side, the vice presidential nominee is not being left in his state of Ohio. J.D. Vance is going to be on the trail, essentially following this swing state swing that the Democratic ticket will be on. I guess we'll wait and see whether or not we're going to get a debate between J.D. Vance and Shapiro or Walz or whoever it may be. We also don't know, Laura, if we're going to get a debate between Kamala Harris and Donald Trump. Of course, Donald Trump over the weekend said that he's agreed to one, just a different one than Harris agreed to. He wants to debate on Fox on September 4th. She wants to debate on ABC on September 10th. How do you ultimately think this gets resolved? Is there just not going to be one?
Well, let's not forget that former President Trump did back out of the ABC debate. That was set, it was scheduled. His team agreed to it. And really, at the end of the day, he doesn't like the idea of now having to debate Harris instead of Biden. And so he has decided to put forth his own proposal, which is a more favorable proposal because it's not only on Fox News, but it would be with a live audience, which are purportedly mostly Fox viewers, therefore people who would be cheering him on. It is a different proposal, and if he doesn't show up on September 10th at the ABC debate, then ABC has said they will make that airtime available to Harris anyway. So I think, we don't know how this is going to play out, but if he doesn't show up for September 10th, I think that is much more damaging to his campaign than if she refuses his latest proposal to go on Fox.
Well, I have to ask you about the messaging from the Trump campaign over the weekend. Donald Trump made his way to Atlanta, in fact, spoke in the very same room where Kamala Harris had a very large rally last week, got a lot of attention for it. And he used his time, it was a lot of time, it was another stem winder from Donald Trump, but he used a lot of that time to bash the Republican leader, the Republican governor of the state of Georgia, which many would argue he needs to win to be the president again. Here's what he said.
Your governor, Kemp, and Raffensperger are doing everything possible to make 2024 difficult for Republicans to win. What are they doing? I don't know. They got something in mind, they got a little something in mind. Kemp is very bad for the Republican Party. He wouldn't do anything.
Laura, what do you make of this kind of talk, knowing how popular Governor Kemp is in Georgia? And what is Donald Trump suggesting that they have going on?
I don't know what he's suggesting, and it's mystifying as to why he would take apart one of his own allies that he needs, who has also said that he would vote for the ticket. So Kemp has not backed away from Trump, and former President Trump should have embraced him in his state and really elevated the Republican unity, but instead he chose to create more divisiveness, and I think it's going to really sort of play poorly for him in that state because Kemp is popular, and certainly there is nothing untoward going on with respect to the election there.
Well, of course, we did get a response from Governor Kemp on social media. He posted on X saying that his focus is on winning this November, saving our country from Kamala Harris and the Democrats, went on to say, not engaging in petty personal insults, attacking fellow Republicans, or dwelling on the past. On the petty personal insult point that is coming from a Republican governor, mind you, Laura, we've talked a lot in the last week about personally insulting Kamala Harris on the part of Donald Trump, questioning her racial identity. For example, how quickly does the Trump campaign need to get that discipline message on the issues out there or risk alienating significant chunks of voters that they thought they may be able to bring alongside this cycle?
Well, the problem is that you can't really control former President Trump. I think Republicans have known this for a long time. His message is what he wants to say, and it is very difficult to corral him toward any sort of policy conversation and the like. And when they did, the Project 2025 has been nothing but sort of a disaster for Republicans. And yet that was supposed to be their grand conservative, proposals that they were going to put forward as being part of Trump's new presidency. And Trump himself backed away from it when he realized sort of how conservative and how extreme some of them were. So, really at the end of the day, former President Trump is running a personal campaign. He is a candidate who believes in celebrity, and he is somebody who believes in kind of his own ability to deliver a state to his presidency. But that has not been the case in the past, and we'll have to see how it plays going forward.
Political scientist Laura Brown, the author of Amateur Hour, Presidential Character and the Question of Leadership. Laura, it's great to see you, and we thank you for the insights today. I'm Joe Matthew, alongside Kaylee Lyons on the fastest show in politics. There's another campaign, Kaylee, we haven't talked about in some time, RFK Jr. You see, he's going out of his way to get ahead of an odd story in the New Yorker.
Yeah.
to let us all know that he dropped a dead bear cub in Central Park about 10 years ago. Said he picked up the carcass after seeing the bear get hit. He wanted to skin it and put the meat in his refrigerator, but he didn't get that far because he had dinner at Peter Luger and had to catch a flight.
Potentially now could face criminal charges stemming from this, but it is a good reminder that there is still third parties at play in this election cycle. RFK Jr. is one of them. I guess the question is whether or not that story makes it less likely he'll make it to November.
He's talking to Roseanne Barr in this video where he tells the tale. Reality TV has reached a new level. Kaylee, I'll meet you back here at 5 for Balance of Power on Bloomberg.
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And a very good afternoon, everybody, live on radio, TV, YouTube, and Bloomberg Originals. I'm Carol Masser. Tim Stenivek is off today, and I guess once he gets settled, there he be.
I'm settled. I've been settled all day.
He is in for Tim. Matt Miller, of course, the one and only co-host of Open Interest. He's also co-host of the Hot Pursuit podcast. He's just kind of a great man about town.
I'm glad to be here. You know, on a day like today, it feels like old times because you and I anchored a show together during the great financial crisis. So we've seen these cascading slides in stocks, and it really is. It was this morning reminiscent, I think, of those times. Although now it's calmed down.
Did you really feel like things were falling apart?
I didn't think that things were falling apart, but we saw, for example, the 2-year yield was further away from the Fed funds rate than it has been at any time since 2008. So there were so many of those kind of superlatives.
Yeah.
We saw the VIX jump up to 65 all of a sudden, and we've only seen that happen like 3 times since the 90s.
We had the S&P coming, ever so close to a correction.
Yes.
Pretty significant. Yeah, we've got a lot going on. We've got a lot of superlatives. We're going to get to it. We should point out equities definitely off their lows of the session. You've got the bond market also kind of backing off of all the buying we saw earlier. So we're going to focus on some of the fundamentals, whether it's earnings, whether it's valuations. And does the Fed really need to do an emergency cut?
No way. That would be like screaming fire in a crowded theater. What a bad idea.
Not everybody feels that way.
Has anyone suggested that? I don't think that would be a good idea.
Yes, they have, Matthew. Did you not read it?
I know that people have said it's a possibility, but I haven't heard anyone say it's a good idea other than Jeremy Siegel on CNBC. He said the Fed should have an emergency meeting and cut rates 75 basis points now and then another 75 basis points in September. But I thought, that guy is cuckoo.
Okay, that is Matt's opinion, of course, his opinion only. But anyway, that would make many of us run for the bunker. Hang on, everybody. A lot coming your way over the next 60 minutes. Let's get you started, though, with the check on that trade. Here is Charlie Pellet.
Thank you very much. And here's what's going on. Carol and Matt, a lot of red, as you well know. Got to keep it locked into Bloomberg Television and Radio for the latest. Right now, we have got the S&P down 150, a decline now of 2.8%. 51.96 is where we stand on the S&P. To put that number in context, the high back on July 16th, 56.67, 51.96 now on the S&P, down 2.8%. The Dow down 984 points, a decline there of 2.5%. The Nasdaq 100 index down 2.8%. The Russell 2000 index of small cap shares down 3.3%. 10-year at 3.77% with a 2-year now yielding 3.90%. Spot gold down 1.6%, 24.04 the ounce. West Texas Intermediate crude down 0.8%, 72.90 for a barrel of WTI. Bitcoin plunging 7.5% with a 54,000 handle now, 54,680 on Bitcoin. The retail brokerages Charles Schwab and Fidelity Investments did report outages this morning amid a global stock market sell-off, but both now say their issues have been resolved by early afternoon. Among specific tech names, NVIDIA shares, they are plunging by 6.5%, Apple down 4.5%, Microsoft down 3.2%, and Tesla now tumbling by 4.1%. Again, recapping, stocks lower across the board, S&P down 151 points, a drop of 2.8%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar along with Matt Miller. He is in for Tim Stanovic on this Monday. It's been an interesting one, to say the least. A couple of stories that really caught our attention, and I'm kind of saying 2 Bloomberg opinion columnists going head-to-head, although I don't know that that's exactly the case.
I didn't read it that way.
Okay, I know, right. So anyway,
not necessarily, right?
Let's get to it. Marcus Ashworth says an emergency Fed rate cut would be a mistake. Connor Sen says the Fed should cut rates swiftly, recession or not. Both, as we said, are Bloomberg opinion columnists. Marcus covers European markets and more. Previously, he was chief market strategist over in London for Haitong Securities. Forgive me if I am saying it incorrectly, Marcus. You can correct me. Connor is the founder of Peachtree Creek Investments. And we can't talk Fed policy without including our own Bloomberg News international economics and policy correspondent, Michael McKee. Mike, first to you, set the dominant Fed narrative. How serious is really the call for an emergency rate cut? And based on the data flow, jobs on Friday, ISM services today, is the economy in a state that really warrants an emergency rate cut?
No, and the Fed isn't going to do an emergency rate cut. I mean, how many times have we had 2% moves in the markets? That's not unusual. We had a bit of a panic this morning. A lot of it was in Asia overnight, where the volumes in U.S. markets are down, and the market has basically just recovered all day. You look at the yield curve now, and it's back being inverted, and from 1 month up to 7 years, all yields are positive. It's all, the 10-year's down by a few basis points. But at this point, the markets are coming back from their worst, and it is likely that we're seeing a correction from people who were offsides in their trades. And there are a number of factors that came together.
That's the debate, by the way. The debate is, have we seen this big downward move in stocks because of a growth scare? Is it worries about economics? Or is this because of the unwind of a carry trade? Is it a mechanical market move?
I think it's all of the above. Yeah. I mean, the growth scare is that we had a bad ISM manufacturing number last week, and then was followed by a weaker than expected jobs report. I don't want to say it was bad, because it really wasn't bad. It was just lower than anticipated. And so people who were on edge, figuring that something might go wrong with this balloon that they had blown up in the markets, the first reaction is to get out. And then you get the pros come back in and get a little bit back into it, because they don't think this is going to happen. And the Fed doesn't want to do a put again. They don't want to get back into this business of the markets thinking they're going to bail them out every time they go down a little bit. So,
isn't that what the Fed does? Aren't they here to keep stock prices up? Wait, are we Fed plunge protection team?
Well, hold on a second. And what is fascinating is you had the JP Morgan trading desk coming out saying the market close to buy the dip level. So it's just, it's just kind of fun to watch this. Let's get into, and let's bring in two members of the Bloomberg Opinion team. And Connor, I want to start also and add you into this. You believe the Fed needs to cut. Why?
So I'd say it's about the balance of risks and the direction of travel in the labor market. So Mike's totally right. This is not a crisis. It's not an emergency. We don't need to panic. But over the past 4 months, the unemployment rate has risen from 3.8% to 4.3%, which is above the Fed's short-term and longer-term target. And I think the direction of travel in the labor market suggests that over the next 6 to 12 months, it shouldn't surprise anybody if that gets up into the high 4s. And that's way, way above where they want it to be. And so the question is, what should policy do to respond? We saw Powell last week say that he doesn't want to see a meaningful slowing of the labor market, which seems like is the risk that we have to face. And so I would rather front load the cuts rather than sort of trickle out 25 basis points a meeting, and then you wouldn't really get back to something close to neutral or wherever we need to go until the first half of next year.
But you're happy to do those cuts at scheduled meetings, right? Starting September 18th.
Sure. Well, we have Fed speak in the meantime. We have Jackson Hole in a few weeks. So I think you can signal those cuts. And, also you can wait another week for the CPI report, retail sales. We don't have an economy falling off the table like we have in the past. But again, if the unemployment rate only trickles up a 0.1 point every couple months, that's still pretty bad. And that gets us to a pretty bad place by the middle of the next year if we don't reverse that.
It's like the momentum in all of this. Marcus, come on in on this. You say a Fed emergency cut would be a mistake.
Well, yeah, I'm sorry. I agree with everyone so far. I mean, normally I don't agree with Matt, but hey, Matt,
I was hoping. Don't agree with Matt. Please don't go there. No.
I love Matt. Anyways, well, the great point here is that everyone is in agreement here. No one wants to see an emergency Fed rate cut. If we see one, we really should start panicking because, look, Powell's been very sensible on this. I think he may want to row back on his. He doesn't want an outsized, i.e., 50 basis point cut to be the first. I think they may do that September 18th. That might be a smart thing to do, to what Connor's saying. If they don't, then at least a clear indication that there is going to be further rate cuts coming and not like this watch and wait scenario you've got for both the Bank of England and the ECB, which is a little bit wet. I suspect once the Fed gets cutting, so will those other two and other central banks around the world. We're all waiting on the Fed. The dollar needs to turn lower. The world will come a bit of an easier place, better place. This is all about stop losses, a position, fundamental repositioning and over leveraging. You can call it the yen carry trade, which is clearly part of it, but US tech stocks have been insane for far too long. They need a right sizing. That's not the Fed's job to come bail them out. The economy will slowly, steadily continue to come down. And I think I agree completely with what Connor and Mike have said earlier as far as getting on with it. Be seen to clear a line in the sand, end of this restrictive rate policy, cut some rates there.
I want to ask Connor about a point that that Michael made this morning. So I was over at Mike's desk, all excited about the SOM rule, right? Because the SOM rule is now in effect. The 3-month unemployment rate has risen 50 basis points, more than that. And every time that's happened, since like before me and Mike and even Tom Keene were born, it has been in a recession. We've usually been in a recession already. So if we aren't in a recession now, this is the first time that the SOM rule has been wrong, essentially. And Mike said, that's because in the past, you had the jump in unemployment due to layoffs. And this time, we have a jump in unemployment in the percentage and the ratio due to a growth of the labor force. So, Connor, do you really think we could get unemployment up to the high 4s? I mean, is the labor force growing that rapidly, or do you expect layoffs, or both?
Well, we've seen the hiring rate has been very weak. Like in the JOLTS report that we got last week for the month of June showed that hires are back to 2011 levels, which I don't think any of us would argue was a good labor market. So sort of weak hires and growth in the labor force gets you mechanically to a higher unemployment rate. And to me, the key insight of the SOM rule is just that the labor market tends to trend. And is it growing or is it doing better or worse? And right now it's still growing, but it's doing worse. And so that's a sort of tricky place because you could argue it's normalization, but at what point does normalization turn into something worse? And I think we're at the point where, at least on a risk basis, it's something the Fed should manage.
Let me ask you, Connor, people are saying the SOM rule, and then you throw in the brief uninversion of the yield curve. Disinversion of the yield curve.
Please write in. We'll take suggestions.
Is there anything out there that tells you this is more than a correction in the markets?
I'd say in sort of listening to companies, they're really just waiting for the demand from rate cuts, which they believe will come to boost their prospects. And you hear that from everyone from furniture companies to Home Depot to anybody in the mortgage market to freight companies. So it's a weird environment where sort of demand for those sorts of industries is very low, but everybody's waiting for rate cuts and they believe that rate cuts will work. And so I do think that'll help prevent layoffs because it's like, okay, the data gets worse and then interest rates fall and it's like, okay, now we're really getting the rate cuts and we can hope for a better time 6 months from now. So I think in a way, the forward guidance from the Fed is sort of helping to do their job for them.
One thing I want to add in, and we've been talking with Gina Martin-Adams, who tracks earnings and obviously the equity markets. We're going to talk with her the next hour, but she has said earnings has broadened out. And then if even, ex-tech, that we've seen like 7% earnings growth, we've seen significant earnings growth in financials. So, Matt, it's been a pretty good earnings season.
Yeah, no, that's why I say, I think the question is, do we have growth scare? Is this about the unwinding of the carry trade? And I want to ask Marcus about that. So, just to make this, more simple, my mom listens, right? The carry trade.
Your mom is super smart, so you do not need to make it simple.
I know, but I mean, okay, it may.
Jeez.
So basically, the carry trade is you borrow in low rate in Japan, basically, say you short the yen somehow, right? And then you use those proceeds to buy stuff in high rate economies like the U.S. or you buy NVIDIA, right?
So did the Bank of Japan mess that up?
Exactly. So that's my question. The Bank of Japan raised last week. And the Fed is obviously going to cut, Connor wants them to cut 100 basis points by the end of the year. Is that going to exacerbate this unwind, Marcus? And by the way, is there any way to measure how big the carry trade is?
Well, I'll answer your last question first. No, and this has been going on for many, many years, and people knew they'll be a lot richer than, well, maybe they are. Maybe some people do know, but they're not telling us anyway, for sure. You can see some of it and calculate the response. This best example of how big carry trade is, look at what's happened to markets in the last few days. The key point of what the Bank of Japan did last week is it's not so much they raised interest rates by 15 beeps or whatever it was. It's that they also decided to halve their QE purchases over the next 2 years. That's a liquidity withdrawal. The Bank of Japan is supplying liquidity to the globe for the last few years. When the Fed and the Bank of England and ECB sort of backed away, the Bank of Japan was still there. So that's what's really going on. And in that context, I think that the carry trade is, it's been a proxy for a lot of other different things. Doesn't really matter how you express it, what you express it. The point is, it's risk on, and it's cheap financing, and it's how the markets react to clearly rather sharp stop losses, which trigger other stop losses, and margins were quiet intraday straight away. But you can sell perhaps securities which would take a 2 or 3 day settlement. So that's the disconnect. I know you guys got a T+1 at last. The rest of the world hasn't. So that's the disconnect that's feeding through. And it'll take a little while to settle out. But I mean, I think it's quite a different type of trade to an economic or even that you mentioned the SARM rule. I mean, I think the key thing for me on the SARM rule is that, you know, even Claudia Sahm herself is saying this is not pushing the US into recession, it's raising the chances of it, because there are different dynamics here. So I think everyone's getting a little bit over their skis. We need to calm down a bit, but this is position unwinding. It's about time. Your US tech stock market is gone too far. It needed a correction.
Yeah, I mean, well, Mike, come on back in here for a second, because I do also think we have conversations about, you know, we focus on the Fed, but it's global monetary policy, right? In terms of, for investors, they need to think about what's going on at all global central banks, right? And what it does certainly for investments.
Sure, and we've seen a lot of adjustment in currency pairs, dollar, not just dollar yen, but dollar pound and dollar euro, as investors figure out the implications of who's going to be doing what. Now, a lot of people put the ECB and the Bank of England on hold for a while because they've cut and they're still dealing with inflation concerns. I think what we'll see next week is the Fed is not dealing with inflation concerns. So once the Fed does start moving or sends the signal that it's going to move, maybe Jay Powell at Jackson Hole, then you'll see some additional adjustments, and then it becomes a question of what does the Bank of Japan do to, you know, it is, as Marcus says, a liquidity issue for the world, and it's the Fed will be adding some.
I mean, I was talking to a trader out of Chicago this morning, and I said, wasn't it the NFP number that unleashed selling? And he said, no, the Bank of Japan took away the world's pool of free money. I want to ask Connor quickly a question about the inflation point that Mike just made, because in your op-ed or opinion piece today, you also said, like, inflation's not a big deal. That's why we need to start cutting rates. What if Donald Trump wins in November and raises tariffs to 60% across the board and deports 15 million, I'm going to say workers, right, from this labor force, and then like also cuts taxes? Don't we then need to start worrying about raising rates rather than cutting?
And just cut about 40 seconds.
Well, I know that.
Yeah.
Sure. So I know that at the Fed press conference last week, people asked Chair Powell about the election, and he's steadfast that they're not taking that into consideration. And if that's where we end up 6 months from now, then if it impacts the labor market and inflation, they will target that. And would it be a political response? You know, you could argue either side, but they're just not going to do hypotheticals about who may or may not win the election.
All right, bottom line, the sky is not falling in. 3, 2, 1, yes or no? All of you. The sky not falling in?
Correct.
Not yet.
Not yet, no. The sky is not falling.
Not yet. Okay, so we'll be
It's
waiting.
a little cloudy.
Unless you're down in Florida today with the hurricane.
Yeah, not so good. We wish them well. That's pretty rough. All right, you guys, thank you so much. Great setup. Marcus Ashworth and Connor Sen of Bloomberg Opinion, along with Bloomberg News International Economics and Policy Correspondent Michael McKee. I always feel like it's important, like perspective. We have seen some really rough days.
Yeah. Well, when I saw
last
last
everything
night,
was coming
when I
undone.
saw the Nikkei down 12%, I felt like the sky was falling, but it's a little calmer today.
Okay, I'm glad that you took a breath. Maybe did some yoga breaths or something. Hey, coming up, though, Buffett bailing on Apple on the heels of selling more B of A. What is he up to, and is there a broader macro story at play? That's next.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got a 900-point drop right now in the Dow Jones Industrial Average, a renewed bout of volatility hitting markets around the globe as concerns about a slowdown in the U.S. economy spur warnings that this year's torrid stock rally has gone too far. So the S&P right now is down 145 points, down 2.7%. The Nasdaq Composite Index down 547 points, down 3.3%. And the Russell 2000 Index of small cap shares down 3.2%. 10-year at 3.78%, the 2-year 3.90%. Gold down 1.5%, 24.07 the ounce, and West Texas Intermediate crude down 0.5%, 73.13 for a barrel of WTI. Bitcoin down 8.5% right now at 54,048 on Bitcoin. Big tech getting hit hard today. Right now, Nvidia shares are down 6.4%. Apple lower by 4.4%. We'll have more on the Apple story for you coming up in just a moment. Microsoft down 3.5%, and Tesla now lower by 4.2%. So again, recapping a wave of global selling. S&P down 146, a drop right now of 2.7%. I'm Charlie Pelletin. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Matt Miller. Matt in for Tim here on Bloomberg Business Week. Just taking a look at shares of Apple. Charlie mentioned down 4%, down almost 11% at their lows today amid that broader really market sell-off. Berkshire Hathaway selling $75.5 billion worth of Apple stock on a net basis. That's a big number.
True, but you know what? Last week, the market was down. Apple was up last week.
So what's your point?
So this was a freak out piece of news that we got over the weekend. And to me, like, it's super exciting because Warren Buffett is the Oracle of Omaha, right? He's the guy who you think is like behind the curtain, the guy who knows everything that you don't know.
And he buys and holds.
And he buys and holds, but now he's selling not only Apple, but also Bank America, and he's like raising this massive pile of cash, and I'm thinking, what does he know that I don't know?
Is he going to buy a country or something, or several? I don't know. All right, so let's get more on the Berkshire move, what it may say about Berkshire and Buffett's macro think on the markets and perhaps the global economy or U.S. economy. We welcome in Bloomberg's Kat Doherty, covers banks and financials. Also with us is Bloomberg Intelligence Senior Industry Analyst Matthew Palazzola, both here in our studio. All right, guys, Kat, lay it out first of all. What do we know about what Berkshire and Mr. Buffett are up to?
So what we know is that he was unloading these shares as the S&P was rallying significantly, and it was setting a record high in mid-July. But now what we know is that as a result, he has this huge pile of cash that he now could deploy. So the question is, will he, and when?
He's been trying to deploy cash for a long time.
He has, and he in the most recent Berkshire annual meeting, they referenced that they have all this cash and that there has been issues of finding places to park it, and that's because deals are very few, far in between, and the prices have not come down. So they're waiting for deals that make sense to them as not the most risky investment, a solid investment that doesn't have quite as much volatility, something that would provide a steady long-term investment, which is what Bank of America was for Berkshire for all of these years. Since 2011, this was something that they bought and they held and they continued to hold until now. I would also note, though, that the selling is not the most significant cut. It's 8.8% through mid-July through August 1st.
8.8% of their Apple stake?
Of their Bank of America
stake. Bank of America stake.
But they're still the largest holder of Bank of America stock by a large margin. Why were they selling Bank?
So we're going to talk to Matt in a second about why they would sell Apple, and he kind of knew they were going to. But why would they sell Bank America? It's not like they have a huge concentrated position there.
So it's today at around 12%. There's speculation shares, right? Of outstanding shares. There's speculation that Berkshire, the firm, is trying to get below the 10% mark. At that point, they don't have to report every time they sell like they're doing now and signaling to the market. And there's also, reporting. There's a lot of reporting and public. There's a lot of eyes on you when you're speculation when you do that, and you're such a large holder
and such a smart guy. Like, he likes to buy low and sell high, right? Maybe this is high. Maybe this is the top. Maybe this is what Warren Buffett is telling us.
And
this is the top of the market.
When he was selling in the beginning, it was at the top. The stock was trading at $44, and then their last statement that came out was showing that they were selling around 41. So if you just think about that $3 price difference, but now the stock is dipping well below that. So the question is he continuing to sell?
36 and change. So do you want to talk Apple?
Well, yeah, exactly. Because Bank America, yes, they have a big concentrate. In terms of Bank America, they have 12%, right? But the Apple trade is a big position on their balance sheet, right? They have a massive weight of Apple, and you need to, when it grows that much, kind of rebalance your portfolio. And Matt, that's sort of what they were doing with their Apple shares, right? How much did they sell their stake?
So they sold half of the shares that they held, and they had sold some in the first quarter as well. So they sold 50% of what was remaining. In the first quarter, Apple was 50% or 40%-ish of their portfolio. So you have one stock.
It's too much. Too many eggs in one basket.
Exactly. And I don't want to dampen your enthusiasm, but I don't think he was calling a top or anything necessarily on the Apple stock. He looks at these companies as companies versus stocks, right? So he wants to own the company. It could be a comment on what he thinks about the earnings power going forward. And he has some concerns about China as well, doing business in China.
But you know, it looks like he's calling a top, right? And
fair.
From today,
I don't disagree.
Like Catherine said, from today, if you look back at where he sold, it was.
He's not the greatest investor of all time for no reason.
To be fair, from kind of mid-April, the stock Apple shares are up almost 30%. So you kind of can get some of it. Is there anything, though, you as someone who follows follows Berkshire and you follow Buffett, that he is making some statement in terms of the macro environment, China or elsewhere, or more globally?
So I would say specifically to Apple at the May annual meeting, he got questions because they had sold, I think it was like 10 to 13% of their position at that point. So they got some questions on why would you do this, and he talked about really thinking that corporate tax rate would go up in the U.S. So maybe he wanted to harvest some of these gains beforehand. And he had talked about really, aside from not the U.S. environment, but the Apple's dependence on China was a concern for him. So I don't know if it's necessarily a call on the macro environment. I think the timing of the meltdown and this happening is coincidental.
How much of this is Buffett? How much of this is the other players?
I think this is mostly Buffett, this call at least.
Okay.
So he's got
the Apple call?
The Apple call, yeah.
Okay.
I think the original, in 2016, when they first bought it, his investment deputies, Welcher and Combs, I think played a role in bringing it to him. They have about discretion over like 10% of the portfolio, so this is clearly more than that.
Right.
So it might have been a group decision, but I feel like not confirmed, but I feel like he would have been the one driving.
So now he has 67 billion.
276.9.
276 point. And I was going to think, like, I'll recommend him to put it in Marcus, and then I get a better rate for the recommendation. You get like 5.5% there. What's he making on all this cash?
So, I mean, one of the things with the rise in interest rates has really helped take the pressure off holding cash. And their interest income, which it comes through their insurance operations, has skyrocketed. It was something like 100 million and then went up to over 2 billion, right? And just the interest on the cash that they got from the Apple investment could help their earnings next year by like over 5%. So
he's putting it all in private credit, right?
I mean, it's all in very short-term fixed income and treasuries.
Yeah, I don't know, Kat, come on back in here. I mean, as someone who watches, the finance space and certainly what Berkshire is up to, I mean, how are you thinking about what he does with the cash? I mean, he's been trying to put this to work for some time.
I think today, all of the notes that I've been seeing from the bank's analysts that are suggesting that now or we're getting close to a time where bargains might be coming. Yeah. And the first thought that comes to my mind is, oh, well, Buffett, is he going to jump on the so-called bargains, or have we not yet seen the bottom? The time is I mean, this is not new. Timing is everything. But any signal that can come any signal from Berkshire going forward is going to be like the most watched signal in the marketplace, I think, of have we seen that bottom? Is this the right time to deploy? But again, Berkshire is looking at the fundamentals. He's looking at these companies as a long-term investment. So he's not just going to think about this as, oh, is this week or mid-August the right time to deploy the cash? It's really still the fundamental work that they're doing on the specific investments, the companies, and not just is it a reflection of how these companies are doing next quarter. It's the long-term outlook. And so a lot are, I think that the jitters we're seeing, if you're looking at or if you're looking at the sentiment and maybe drawing the connection to Berkshire, is this a reflection of the U.S. economy, and that Berkshire is signaling that there's more pain to be felt. That's why Bank of America, as an investment in the U.S. consumer, is something that folks like to draw that connection. So really, any big question marks that he might be seeing might be digested by the marketplace or by investors today.
By the way, I'm looking
That's why we're talking about it, right?
You know, if you type MMFA index GP on the Bloomberg, you get a picture of all of the U.S. money market assets, or all U.S. dollar money market assets around the globe. $6.1 trillion. And I just looked, so Warren Buffett is holding basically 5% of all money market fund assets, if that's where he parked his money,
That's
right?
pretty crazy.
Yeah, I mean, it's easy for them, you know, to park it there. And one thing I'd like to note, they did buy a bunch of Chubb stock in the first quarter. That would get me excited. That a mega insurance deal in that world would be something that would really get me excited.
Could they buy all of Chubb?
I mean, they could. I don't know.
106 billion market cap.
I don't know if Chubb would sell, but you know, if they're looking for a you know, precursor to their insurance operation.
They kicked me out as a customer, Chubb. Yeah. I used to be a Chubb customer, but they will no longer insure me.
All right, to be continued. There's obviously more to that. Kat Doherty, thank you so much. Finance reporter at Bloomberg News. Matt Palazzola, he's property and casualty insurance senior analyst, hence the Chubb comment here at Bloomberg Intelligence. All right, folks, let's get a check on world and national news. Off to Nancy Lyons. We go. She's in D.C. Hey, Nance.
Thanks, Carol. Hurricane Debbie is expected to linger over the southeast most of this week. The storm came ashore early this morning in Northern California and is expected to dump epic amounts of rain. Billy Staley is with Orangeburg County Emergency Management in South Carolina.
We are looking for rainfall totals anywhere from 10 inches to 20 inches across the county, depending on where you're at in the county. That's prompting us. We're having to review some of our rescue plans.
Debbie, which is now a tropical storm, has already caused widespread power outages in Florida and coastal Georgia. President Biden is meeting with his national security team this afternoon with growing fears of an attack by Iran on Israel. Tensions in the Middle East are high following the recent killings of a senior Hezbollah commander in Lebanon and Hamas's top political leader in Iran. Pope Francis has accepted the resignation of Cardinal Sean O'Malley as Archbishop of Boston and has named the current Bishop of Providence, Rhode Island, Richard Henney, to replace him as leader of one of the most important Catholic archdioceses in the country. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.